Okay, let's get started, guys. Welcome. Thanks for joining. It's almost 7 a.m. Eastern here. We rolled back the clocks on Saturday night, right after the Blue Jays blew it. So took me a while to recover from that. Last time was 10 and 11 years old when Blue Jays won it. And it's been 32 years. And I don't know if you guys follow baseball, but if you followed that series, that World Series against the Dodgers, oh my God, was it ever intense and back and forth. One of the games went 18 innings. Basically, they played two games in one. And in the final game 7 in Toronto, to wrap it up, win or lose, they were up and they blew it in the last. Oh my God, and it went extra innings and just horrible. Bad luck. Bad luck. I wanted that win so bad, just to rub it into the Americans. But there's always next year. I hope you guys all had a great weekend and ready to get started. Again, we have a busy week. It's a new week, new month. It's starting November. There's a lot scheduled this week, news-wise, we're going to go over quickly. And NFP Friday is tentative. US government is still technically shut down, second longest in history, and it might actually be the longest in history if we get through this week and it's still on shutdown. Okay, so whenever there is some type of event like this in the news, just please trade careful, proper risk management always. Let's not let's stop blowing up accounts, okay? That's got to stop. Like we got to put an end to that. And someone says, "Well, Ron, I'm still using a prop firm, so I don't really care if I blow it up. I'll just buy another one for $20 or $30 or $50. That's not the point. The point is not to just blow up accounts because prop firms are on sale or that's what you're doing. Because no matter what, you're going to learn bad habits and you're going to continue with those bad habits, whether it's a $20 prop firm or you deposit $20,000 of your own money. You're going to learn bad habits. So I suggest we stop trading like that, and start to really learn how to really trade the markets. It's a slow and steady process. The name of trading the game is called compound growth. It's by gaining a 1/4%, 0.5%, 1%. If you can do it on a daily basis, that's the goal, and continuing to compound over time. And then after 1 month, after 6 months, after a year, if you continue with this process, your account, your capital will continue to grow, your confidence will continue to grow. And when you do have a losing day, which we all have losing days, you will be able to understand that you might lose 0.5% or 1%, but your account is not blown up. And then it's easy to recover that loss the next day or the following day and continue to compound that account. Okay. It really does help, guys. And if you understand this, I know that some of you guys are in this trading game for the long term, that you're not just here for this week and that's it. You're here for multiple years to come. So if you learn this from now, the earlier the better. If you don't learn this, it's going to take you a while and you're going to continue to make trading difficult for yourself. Okay, so hopefully we all understand this. It's a marathon. It's not a sprint. And trading is not a casino. It's a business. So you need to treat it that way. Okay. So with that being said, good morning. I hope everyone's got some coffee and we're ready to go. Okay. Welcome everyone. Justin, good morning. Ferdinand, welcome. Conrad, Nigel, welcome guys. Pramilo, thank you for joining. Welcome, guys. Sarah, good morning. Danny, welcome. Yeah, Toronto is same thing, game sevens. That's why I'm not a Leafs fan. I'm a Habs fan. Montreal Canadiens, and they're doing really well to start this year. Hopefully, they can continue that momentum, and maybe I can see my Montreal Canadiens. Again, last time Montreal has won a Stanley Cup was 1993. It was that same year. Same with my Cowboys, all of that. I had a great time of my life when I was 11 years old. But since then, none of these teams have won. So it's been a long haul. But I'm loyal and I'll continue to be that way. So welcome, Frank. Good morning. Yeah, or 0.5%, whatever, or 1/4%. Everyone is different. You got to figure out what's your percentage for your account, right? It's not a cookie cutter approach or just mimic what I do or what Dave does or what Forex Borgs does or so what someone else does in the group. Again, We don't know what type of capital I'm trading with. We don't know what type of capital Dave's trading with. We have no idea what type of capital Barks is trading with. It's a game of percentages. If Barks can get 0.5%, I get 0.5%, Dave gets 0.5%, we're all getting 0.5%. Whoever has more money obviously is making more money. And you guys also can get 0.5%. Okay. The language, you got to understand the language of trading. It's not in dollar figures, because those can be different for everybody, but the percentages are the same. A point system, a tick system, a pip system. That's the language that we want to talk about, okay? And just go after your goals, realistic daily goals. Don't have unrealistic goals like I want to get 20% every day. I would love to get 20% every single day too, but it's a stretch. That's very hard to do. It's like the Toronto Maple Leafs trying to win the Stanley Cup every year. It's a stretch, but it's a long shot. Okay, so let's get started. I know we were supposed to start at 6 a.m. I just want to show you guys something because we do have some new snipers in the group. Thank you for joining. Welcome. Good morning to you guys, and thanks for joining. Over here on our Discord, this is a very important section right here, the announcements. Okay, anytime there's something to do with the live Zoom session, whether it's pushback, canceled, delayed, whatever it is, it will be over here. Because I saw some questions in the chat saying, where's the link? What's going on? This, that. Make sure you understand here in announcements, this is where we put all important announcements. So at 5 a.m. this morning, I had something I had to do, and I put, we will begin live New York around 7 a.m. Eastern right now. So there's whenever you need to find something, it'll be here under announcements. Okay. Um, But let's get started, okay? So we will obviously look at gold. We have another hour and 20 minutes at 8:20. Comex market will open up. So we'll come back, we'll do a top-down analysis. But today is Monday, it's the start of the week. So what we got to do is our weekly analysis. Hopefully some of you guys already have done this. Maybe you took some time out of the weekend to do this. Maybe you did it this morning. But if you haven't, I'll help you guys and we'll do it together as a team here. So number one, today is Monday, November the 3rd. Start of the new month, start of the new week. Okay, so this is a fresh week for everybody to, if you had some difficulty last week, this is a fresh start. And also, it's a new month. So if you had a rough month of October, go back and learn from it, figure out what you did wrong and learn. Those are lessons. I did a blog on lessons learned in trading. Hopefully you guys also read over that blog to help you. We all take losses, but losses are lessons in the market and can be learned and move forward. Some traders don't learn lessons from their losses, and that's why they continue to struggle day in and day out. Okay, so at some point you're gonna have to figure out what you are doing wrong and figure out how we can correct this. Okay, it's part of our job as trading. Trading is not just trading candlesticks. It's part of your job to also do all of the other housework, all the housekeeping tasks. It's your risk management. It's how much am I going to trade today? Is there news in the market? Should I be lowering my risk today? All of these things. You've got to understand how to do this on a daily basis. Once you put these pieces of the puzzle together, trading will be much easier for you. Okay. So there was a lot of news coming out of Europe, a lot of Italian manufacturing, French manufacturing, German manufacturing, Spanish manufacturing, all coming out, British manufacturing, all of that. That's been released. Now we're moving into over here, North America, coming in at 8:30 in the next 90 minutes. So normally we have some Canadian news, we have some US news. At 8:30, we don't have anything scheduled. So when we're trading gold at 8:20, it's Comex market open. The exchange for gold is opening up. We don't have any high impact news at 8:30. News starts at 10 a.m. So right after Wall Street market opens at 9:30, we do have a 10 a.m. red folder, ISM manufacturing PMI, and we've done multiple blogs on all of these. So you can go back on our blog section and just scroll down and you can find something on manufacturing and it will have a detailed analysis of what this folder is and what it measures and why it's high impact. Okay, that's at 10 a.m. That's when we'll be wrapping up the call. Please, if you guys are going to continue to trade after that, just understand that there is high impact news. Okay, throughout the day today, there is more news. Also over here in Canada, late afternoon, 1:30, Bank of Canada Governor McLean speaks. Then if you are coming back later on for the futures session, the Tokyo session, the Asian session later this evening, there is a lot of Australian high impact news. If you're trading the Australian dollar, keep an eye on that at later tonight at 10:30 p.m. Okay. Moving into tomorrow. Um, Tomorrow, November 4th. So tomorrow will be our post New York session. Dave will be doing the New York. We have our look at all of these US folders are all tentative. Why? Because this yellow ticker down here, US government data may be impacted by the shutdown. We're currently still in the shutdown. You guys remember the deadline for the shutdown was October 1st, and today is November the 3rd. So it's been well over 1 month in the shutdown, and it's still continuing. So all of these US events might say this tentative events are subject to either be delayed. We've seen that a lot last month. They'll either be revised. We haven't seen too much revisions, and we've seen cancellations. So you remember last NFP when the shutdown started, they canceled NFP. NFP is scheduled again for this Friday, and if the government is still shut down, NFP could be canceled again for 2 months in a row, where they're not releasing the actual job creation numbers. We're not getting any weekly unemployment claims. We're not getting anything coming out of the US regarding labor. So that's not good, right? So the markets can continue to be volatile. So you can see we have all tomorrow tentative events. Our JOLTS job openings. This is our job openings and layover turnover survey. Again, it's tentative. We don't, it might be canceled tomorrow, okay? Unless they come up in the shutdown, they resume and they get back to work. Um, but that's what we got going on tomorrow. Not big news except for maybe that Jolt job, and we don't have the time. Again, normally it should say here 8:30 a.m. Eastern or sometime. We don't have a time. Okay, so that's what tentative means. So that means that we have to mind our risk management because we don't know exactly what time they will release these folders if they do in fact even release them. Okay, so you have to keep that in mind. Moving into Wednesday, midweek, okay? We have a lot of, again, if you're trading the London session, the European session, you can see there's a lot of European news coming out of the market, all low impact. When you've got multiple low impact folders, 2 a.m., 2:45, 3:15, 3:45, 3:50, 3:55, 4 a.m., 4:30. You have multiple folders, low impact, could provide choppy trading. So just keep an eye on that. As we move more into our North American session, we have at 8:15, 5 minutes prior to Comex, our ADP non-farm employment change. That will possibly, we'll see if it will be released. Right over here, remember it was negative 32,000 the previous month. They're forecasting positive 28,000. Okay, we'll see what the actual number is if they do release it here. And then again, right after Wall Street opens, 10 a.m., we have our ISM services PMI. Okay, so this is also very important folder coming out at 10 a.m., high impact. We'll see what it says. It's kind of like a gauge. Anything above 50 is kind of an expanding market, growing growth. Anything above 50 is good. You can see the previous month was 50 exactly. They're forecasting a little bit of an increase, 50.8. Anything below 50, if it's 49.5, 49, it's suggesting that the economy is contracting, shrinking, getting smaller, not growing. So that's what we have to look at this actual number. And it could just be right around this 50 baseline. Okay. And then every Wednesday, you have your crude oil inventories at 10:30 that come out. It's your weekly inventories, very similar to our Thursday morning weekly unemployment claims. They come out week over week news. And that's scheduled for this Wednesday if you're a crude oil trader. Thursday is the busier day in the markets news-wise. Lots coming out of Europe. There's a lot of British news. You can see that the British news have their monetary policy report. They have their summary. They have their official bank rate votes and their official bank rate. So you can see previous month in the UK was 4%. It looks like they're forecasting a pause. No increase, no decrease is in the forecast. We'll see what the actual results are. And you can see it's scheduled for 7 a.m. Eastern. If you're trading the pound, the euro, anything to do over there, this could be very volatile. It's basically like the FOMC of UK over here, okay? And then you have right after that, you got president in Germany speaking over here. You have your Bank of England Governor Bailey speaking 30 minutes later. It's kind of like the conference where Powell speaks 30 minutes later regarding all of these decisions, breaking it down, answering questions. So it's basically the same thing, but in the UK. Okay, and then just notice the time. And if you're trading the pound, you have to understand that it could be very volatile at that time. Okay, and then here we have our Thursday morning unemployment claims that are released every single week, Thursday at 8:30. And you can see the time doesn't say 8:30 a.m. It says tentative due to the government shutdown, high impact. We haven't had unemployment claims for over a month now. It's been 4 weeks now. They have not released any unemployment numbers. So we do not even have any um, understanding of week over week of what the actual was or the previous. We have no idea. So this could possibly be canceled again if the government still remains shut down. And then let's say, for example, today they agree and they come to some sort of agreement and the government in the US is not shut down. They all get back to work. This could be a very volatile event because they might just release a number and we have nothing to gauge or to go by. So at that time, you got the best case scenario is just trade with proper risk management or let the news happen, let the volatility go by and trade after when the market calms down. Okay. You don't need to trade right away. You don't need to trade on this and anticipate what's going to happen when we don't have any news. To me, you're basically gambling. Okay. Yes, you can be in a trade and then they just release it, and that's a different story. But knowing you got to trade with proper risk management going into this. Okay. Um, that's Thursday morning, and we'll see if they release it or not. And there is some more FOMC speakers speaking throughout the day on Thursday. And that's the biggest news on Thursday is the UK monetary policy and the unemployment claims. Then finally, Friday, the first Friday of every single month, unless there's a federal holiday, is scheduled as an NFP, non-farm payroll. So you can see it's already scheduled in here. But again, tentative. Okay, so coming out of Europe on Friday, you can see there's some European news, but the market is really waiting for this. In Canada, 8:30, we have unemployment change and unemployment rate. Looks like our unemployment is going up. Previous month, it's going up from 7.1 to 7.2. That's not good. Um, and our employment change is decreasing by negative 4,000 from 60,000 from the previous month. Not good. In the US, tentative, 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 tentative. Normally at this time, 8:30 a.m. Eastern, you guys know we get our NFP, and here's our average hourly earnings month over month. We have no data. Our core PCE price index. This is not to do anything with the NFP. This is another high impact US folder that is scheduled here, but tentative. And then we get our non-farm employment change. Again, we have no data here from the because they canceled the last NFP, and our unemployment rate. We have no idea as well. Okay. As you can see, we have no data over here. And if the government is still shut down, they will possibly cancel this NFP event. And it's really hard because we have no information as to what is going on regarding labor in the United States. How long is this going to continue? I don't know. Okay. I don't work for the government, but it looks like both sides are stubborn and they're not reaching any agreements right now. Okay. So right over here is an article if you want to read it. Government shutdown could become the longest ever as Trump says he won't be extorted by Democrats. There's just a little article right here. The government shutdown is poised to become the longest ever this week as the impasse between Democrats and Republicans has dragged into a new month. Millions of people could lose food aid benefits, healthcare subsidies are set to expire, and there are real talks between parties over how to end it. Okay, so I was just reading, I believe Saturday, SNAP benefits ended. So we're going to see a lot of Americans who rely on food aid, food stamps, government subsidies, unemployment insurance, kind of social insurance, childcare benefits, things like that are all being canceled. So I hope this doesn't last long. I hope that they can reach an agreement because a lot of Americans, I believe it was 30 million Americans are going to suffer due to this ongoing silly government shutdown over here, where these politicians can't come to work and they say that they work for you. They're all about the American people. They're full of shit. They don't give a shit about you. 30 million Americans are going to be have no food to eat next week. Okay, so I'm not American. I'm just reading articles here. I'm Canadian. We have our own problems here in Canada ourselves, but I just read what I see here. Okay. So that is what is going on in the news this week. Okay. So trade careful, risk management. Earnings wise, you saw last week had big earnings. Wednesday, Thursday, we had our big tech earnings. We also continue into earnings this week. Let's just go through this quickly. In the pre-market today, is there any big names? Berkshire Hathaway. Some of you guys are familiar with this corporation. This is Warren Buffett's security over here. He's kind of passed it on to a new CEO, and now Warren Buffett is on the sidelines here. But this is a pretty big company. It's one of the wealthiest equities, and they invest heavy in American companies. Okay, so they report today in the pre-market at 8 a.m. After hours, there is a company here, Palantir. Some of you guys are familiar with this company. Um, Peter Thiel over here, Palantir. It reports in the after hours at 4:05. Hims and Hers Health report as well. Some other corporations, but the big one, this is not Apple. This is Apple Hospitality. Apple released last week and they hit new all-time highs. But Palantir is this afternoon. Tomorrow morning, we have Shopify, Uber, Spotify. These are names that we're all familiar with. Okay, some of you guys use Shopify when you're shopping online. Uber Technologies, if you guys get Uber Eats or Uber Taxi, you guys know how this company works. Spotify, music, all of this. Continuing BP is crude oil. You can invest in Ferrari. All of these publicly traded companies. Okay, that's tomorrow before the open. After hours, we have AMD. This is a big company. Circle this on your watch list for Tuesday after hours. AMD is a very similar company like Nvidia, okay? And this thing has skyrocketed in the last year. So AMD will be reporting super micro SMCI. So you can see that we have the semiconductor space, the chips are all over here reporting, okay? And that is Tuesday after the close. So if you trade Nasdaq, if you trade S&P 500, this could have an impact on that. So you got to understand, are you taking trades going into the close? Will you be holding overnight positions? All of these things need to be factored in because this could be volatile when they do release. Okay. Continuing Wednesday before the open, we have Novo, we have McDonald's. Maybe some of you guys are very familiar with McDonald's. It is a publicly traded company. You can buy shares of McDonald's. You could trade this company if you think McDonald's is making money or if it's going down. You can short it, you can go long, you can do whatever you want through options. Um, Again, I don't think McDonald's is going to move the market. It might have a little bit of significance. It's more traded in the Dow Jones, not so much in Nasdaq and more S&P 500. Wednesday after hours, we have Robinhood Markets. Some of you guys trade with this company. It's publicly traded company as well, Robinhood. There's AppLovin Corporation, Qualcomm Incorporated, Dutch Bros, AMC Entertainment. This was a fun little security during the COVID times. It was very volatile, made a lot of retail traders very wealthy with the pump over here. But it's kind of died off and we'll see if it has any more volume coming in. Snapchat over here, Duolingo. My daughter uses this. So it's a great DoorDash, all of these things. Okay. I'm going through this a little quicker. Just going through the bigger names. Hopefully you guys have done this yourselves. Okay. And then we go into Thursday before the open. We have Celsius, ConocoPhillips. Again, I don't think that these are really going to have an impact on the markets. That's why I look for those big names like AMD. Those are the ones that we need to really pay attention to. Thursday after hours, we got Trade Desk, Open Door Technologies, SoundHound, DraftKings. Again, I don't think they're going to have a big impact unless you're trading those individual companies. Okay. And then Friday before the open, We have NFP that may go down, may not, may be canceled. We also have Wendy's reporting, Constellation Energy, Canopy Growth. These are the cannabis sector over here. And that's what we have going on for earnings this week. Friday evening, there's not much going on. Probably very Friday evenings in the earnings when the markets close, there's basically sometimes there's no companies reporting. There might be one or two. Okay. I don't think those will have an impact. In the news today, Trump and China and others can't have NVIDIA's top AI chips. President Trump said AI giant NVIDIA's most advanced chips will be reserved for US companies. We'll see whatever Trump is talking about here. US stock futures climb as November kicks off with earnings, AI and Fed. Fed follow in a busy earnings calendar. What to watch for this week? We just kind of went over it. Here's Warren Buffett and Berkshire Hathaway. Berkshire cash sets record as profit rises ahead of Buffett's exit. Um, Secretary Bessent says high U.S. interest rates may have caused housing recession. Tesla to buy 2 billion of ESS batteries from Samsung over the next 3 years. Microsoft signs a $9.7 billion contract with this security right here, IREN for NVIDIA chips. And this corporation is up 23% right now in the pre-market, IREN. So, if you're kind of reading your news ahead of time and maybe you read Microsoft was maybe looking to invest in this company and you bought this company ahead of the announcement, they're up 23% right now. So that's just the stock security price is up. If you bought options, you had the call option for this. Your option, your premium could be up 100, 200, 300, 500% right now. The premium of that, if you caught this in time. Now it's already been released. Yes, it could go up a little more, but the whole objective game of trading is to anticipate these moves before they are announced. So that takes research. Someone says to me, well, Ron, how do we do that? You gotta research, research, research. If you to get in, you gotta research companies. You gotta read. It takes a lot of time. That's why traders don't have the time to do this, and that's why they can't get in early on these things. So that's why I love the stock market because there's endless opportunities, but it just takes a lot of research. Okay, you gotta be in before the herd gets in. So that's anticipating it before it happens. But there's always clues ahead of time. You might see 2 weeks ago, there might have been an article coming out. Microsoft is in talks with this company. And then that's where you start. And then maybe follow the lead, right? And you don't have to go all in. You could buy a couple shares of that company, maybe entertain one contract or one option and go from there, okay? And see how it works. What else we got going on? Tariffs, tacos, okay? Not the tacos we eat, but Trump always chickens out those type of tacos and dollars. Um, Look, this is the global markets in the year of Trump 2.0. Trade deals and $90 billion in tariff revenue. What's riding on the landmark Supreme Court case kicking off this week? So there's a Supreme Court case that might cancel all of Trump's tariffs. So we'll see how that vote goes. So they could overrule Trump and his tariffs. The Supreme Court has the official say. They are the higher courts. So they can scrap all of Trump's tariffs to all of the countries around the world. Trump kind of they questioned him. He said it would be detrimental to the U.S. and possibly cause U.S. to become a third world country. Those were from his lips. That's what he said. So I don't know if he's trying to cause fear or what it is, but I've never seen tariffs cause a country, if you cancel them, for the country to go bankrupt. That's got to be something else, not from tariffs. Um, what else we got? And yeah, gold. So we're going to get in gold. There is an article here on gold. Gold steady around $4,000 after China ends some tax incentives. Okay, so that's regarding gold. Silver. We always talk about gold and gold and gold. We don't talk too much about silver. Silver is always the quiet one behind, but silver could hit $100 per ounce by the end of 2026. It was always consolidating for about 15 years, anywhere from like $24 to about $32, and then it had its breakout to 50, $60 an ounce, and we could see possibly $100 an ounce in silver. So if you want to kind of invest in other precious metals other than just gold, there's silver, there's copper, there's palladium, there's all kinds of other metals that you can look into. Okay. Silver is just not as sexy as gold. It doesn't get the attention of gold. But if you want to buy and hold for 5 years, 10 years, 15, 20 years down the road, silver could be a nice option over there. And I mean buying physical silver, not just buying with a broker and holding it for years to come. I'm talking physical. If you're looking to invest by buying physical bars of silver, okay? And that's our news in Discord, guys. Last week there was a couple signals that sent out the long on US 30 right over here. Beautiful, two setups. As it came up to the resistance became support, and there was another push for over 200 pips and another 100 pips. Commodities, guys, right now. If you got in gold, there was gold signals right over here, just above 4,000, 3,998. Okay, it was kind of consolidating here. We'll get into those charts, some volume closing above. You're going to look at follow your wicks, higher lows, couple retests, and now it's moving up to these wicks. It's got some more resistance it could go up to. We could see maybe 4,015 up here, but it could also pull back and retest in here. Maybe it might lose this and continue to go down, but right now it's holding, okay? So we'll do a full top-down analysis on gold and we'll get into it, but that's our signals. And guys, just want to go over this weekend coming up, Saturday, Sunday, November 8 and 9, starting at noon. I'm going to do a 2-day boot camp on risk management, how mastering risk, talking about best risk management practices for long-term success in the markets. If you want to join, so first thing is anyone that's in the lifetime membership, you guys are all included in this. Anyone else, you have to sign up here. We'll tack on an additional month to your membership, and then you can be part of this. Okay, so there is still time to sign up if you guys want to sign up with us. And for anyone in the lifetime, if you guys miss it, it will be uploaded to the website for you guys. Okay, and then you can go in and watch it. That's this weekend coming up. Okay, and also, guys, lots of education. I see some of you guys are learning from the education. Some of you guys haven't had the time to go through it, but there's a lot of courses, boot camps, all types of webinars. Everything is available for you guys. You guys just got to go in and browse around and see what's available there. And I did a blog right over here on losses in trading offer valuable lessons. I hope you guys can read this. It's not long, but go over it, okay? Because trading in financial markets involves a degree of risk, and taking losses is an inevitable part of the process. We all know this. Everyone takes losses, okay? There's no one that is perfect. Even traders on Wall Street take losses, okay? So it's going to happen. Okay, maybe you're on a winning streak right now and you've won 100 trades in a row. Eventually your day will come and you're going to take a loss, okay? And how are you going to handle it? That's the main objective. We're all going to take losses, but it's how we handle it. So even the most successful traders experience losses. The key to long-term success is how one manages those losses. Here's why it's normal for traders to take losses and how to proper risk management and capital protection can help recover from them. So if you guys want to read that article, you can go over it. It's not long, but maybe might get you thinking of a few things, okay? And then there was also a weekly market outlook for members only that was released, and last week's point of control in the Tokyo sessions. So this will be our final week of doing some New York sessions, New York and post New Yorks, and then going into next week, for the next couple of weeks, we're going to do some, again, we're going to go back to Tokyo for a little bit and watch gold, how it moves and how it rips in the Asian sessions, because gold is trading really, really well in the Tokyo session. So we'll go back to that in the next few weeks. Okay, so let's get on with gold. We're going to start off with a top-down analysis. Some of you guys have already done your work over the weekend. That's fantastic. But if you haven't, I'm going to start and you guys can follow along with me. If you guys have any questions, ask questions. This is the time to ask questions. We're not on YouTube. YouTube will only be Tuesday and Thursday this week. So Monday, Wednesday, Friday, is private with myself and Dave. Also, our private sessions. We're just limiting YouTube down. We'll scale it back up in the next little bit, but just wanted to reduce the time on YouTube and focus on you guys. Okay. So this is what we got going on the daily. Okay. So number one, we did have an all-time high on gold. Hopefully you guys are aware of that. Okay, so what I do is I mark my all-time high. I know it's around 4,382. I know it's different on the futures charts. I know some of you guys are trading futures and it hit 4,400 up there. Remember, I'm not looking at just the numbers. I'm looking at the candlesticks. Okay, you can see the candlesticks. If you're following futures, you got to follow the futures charts. If you're following Forex, you follow Forex. If you're trading futures and I'm doing Forex over here, we're gonna follow the candlesticks, okay? And not too much focus on the numbers, okay? And we had an all-time high, and since then it's been rejected. You can see that the sellers are in control, pushed it down. There's a wick, and a big bearish engulfing candle. So there's the supply zone and stretch it into the future. Have we came back into here? No. If we do come back in here, is it going to create a new all-time high? Possibly. Or is it going to be a double top and drop? We don't know until it gets up here. Okay. But just working our way down. Is there a big engulfing candle? Can we figure out the point of control of that bar? Can we figure out where half of it is? Yes. How do we do this? You use your very handy tool, the Fibonacci. If you measure it from the opening balance to the closing balance, that's what I do. Some of you guys go from the highest wick to the lowest wick. If you do that, that's fine. You guys are correct too. But all I say is stay consistent. If you're going to do that style, do it when you go down to the 4 hour, when you go down to the hourly, to the 5 minute, to the 1 minutes. Follow the entire range. I follow the bodies. Why? Because I believe that the opening balance and the closing balance has more significance than just the high and the low of the day, or the high and low of that candle. So I follow that. Don't ask me why. I've been doing it for over 20 years, and I find more probabilities, more accuracy by following the open close of bodies of candles. Okay. And I stay consistent with following the open and close on all time frames. Okay. I do measure the wicks, the range. So if I get in a trade, I'm looking to fill that wick and things like that. But I don't base my analysis off of just wicks. Okay. So do you guys understand what I just did there? Real easy. Figured out the all-time high supply, brought it into the future. Figured out that bearish point of control of that candle, and I look, have we transacted back into that candle or this zone? We haven't. We haven't came back in here to push back down. So how can I talk about the all-time high when we haven't even came up to this zone, right? You got to break through here in order to get to the all-time high. Okay. So I can tell that the sellers are strong. They have another block in the market and it hasn't been transacted yet. Okay. So sellers are still strong in the market. The most recent high we've had is right here. Wednesday, October 22, Thursday, October 23. So that's where maybe we can draw a line just to let us know right here, 4,160. That was the last time the bulls tried to penetrate up here. They came up there, they got rejected back down. They came up there the next day again. Equal highs, they pushed it right back down. They came up again, lower high, and pushed it back down. And then here, see how that's a little bit of a flag in the market right there. And then you notice how it's following this big bearish candle. That's like a flag pole, right? That's your pole, and here's your flag. This is a bearish flag pattern. This pattern has a high probability of continuing to move to the downside. And you can clearly see it did it right there on Monday. Start of the new week last week, it was an ignited bearish candle. So you guys know from me talking every single day that this candle has a lot of significance when it opens ignited like this. It didn't open positive and go blue and come back up. The sellers were right there right away, pushing it down. So they've accumulated enough volume, and not only did it come down, but it pushed below those wicks and created a new low and closed below there. Okay. So this candle alone, can we figure out 50% of that candle? Can we figure out the point of control of that candle? This is a significant candle that closed below structure, closed below this body, this body, this body, and closed below those wicks. So if I'm just eyeballing and cutting it in half, I would be cutting it in half right there. And look at the number, 4,050 and 75 cents. And I can see as we were coming up, you can still see we haven't got above 50% of this candle. So it's telling me basically the sellers are still in control. So let's not just guess where 50% is. Let's know exactly where 50% is. So get your Fibonacci tool again, opening price, closing price. 50%. See, I was a little off. There it is. There's 50%, 4,045. Now I want to find my point of control of that candle. Again, just one line above, one line below, and there I have it. Stretch it into the future. Now I can see exactly how we traded into it last week and what were the results. Okay, so you tell me, are we still pushing down? It still is. Okay. It came all the way down and created that was the lowest point last week, Tuesday. So if I'm looking at like a weekly low, it's right there. I just use a normal, just a yellow line to let me know that's my weekly low. I see that the buyers brought, and then also when you're learning and backtesting, look at that wick and look at the line. Look at where it starts, right at that bullish ignited candle. And previous to that was resistance, resistance, resistance. That body closed above, and that now created the support. And that's why when it came down there, it went right back up because there's buyers there supporting that move. Lots of buyers at 3,885. Came right back up. And with that momentum the next day, last week, Wednesday, it was very bullish. This was a big blue candle coming all the way up. And look, it tagged right at the bottom of that point of control. Sellers were there. They pushed it all the way back down. Remember, this was a strong blue candle on Wednesday, and they flipped it and pushed it down and closed it as a bearish pin bar. Okay, so do we have now a location where there's a body close and a body open right above here? Yes, we do. So 3,928, 3,930 looks like a good supporting level where buyers are coming in. And look at when it came back next day, Thursday, open, bearish, equal lows. Do you see those wicks? I could draw another line like right there. Those are equal lows at 39.15. That's the clue that's telling us that the sellers don't have momentum to continue to push for a new lower low below that previous day. So buyers are stepping in and getting it back to that opening balance. And then you have another big, strong, bullish candle. Look at it come all the way up, close right relative to the high. And next day, you had another bullish candle open up, ignited blue off of that momentum. It opened blue, and this was a big blue candle on Friday of last week, coming all the way up, all the way up. And look, it transacted exactly at 50%. And what was the results? The sellers were there and they pushed all that big blue volume all the way back down to the opening price. They flipped the candle all the way bearish down into there. We traded into 50% of that big bullish candle, and the buyers brought it right back up and we closed right there. Okay. So now you see I'm following the volume. There was the closing price on Friday. I see our opening price today. It opened and it was initially bearish, 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 bearish right there. That's our lowest point of the day right now. So I draw a purple line just to let me know where the lowest point is, 3,962. The buyers stepped right back in, pushed it, that big bearish candle opening all the way back up to the opening balance, flipped this into a bullish candle. Again, we transacted right at the bottom of that red zone and sellers are there rejecting it back down. So we have a little bit of bullish volume. It looks like it's a spin top candle with a little bit of bullish volume. So it could continue to go back up. However, sellers could bring it right back down to this yellow line, opening balance right around 4,000 and maybe flip the candle back down black. And is it going to fill all the way down these wicks to break that low and continue to drop down? Maybe it just comes down a little bit and goes back up. Right here, I have a body and a body. So I want to locate those bodies and draw a yellow line because if it does come down, let's say it flips and comes back down black, 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 maybe it stops right there at 39.80 and then that blue volume comes back in and pushing it right back up. Okay, so that's a place I like to identify, 39.80, before it comes down to the lowest point of the day. One final thing that I want to look at is this big bullish candle, okay? Remember we did a lot of analysis on the big body bearish candles? That's a big bullish candle in the market that came in on Wednesday last week. Can we identify the opening price with the fib, go to the closing price? We can. Can we look at where 50% is? See, there's the zero point 0.5. That's where I placed it at the body to body. But if I now want to just move it, manipulate it myself to represent 50% exactly of that big bullish candle, I can. And the price is 39.76, 39.75, that psychological area. And then as well, what I could do is I could find the bullish point of control right now of that big blue candle. And there it is, 618382. I make it green now. I know it's a lot of green boxes and red boxes, but this is part of the analysis to understand until we start to break out of this consolidation, who has power. So now I can see. Now it's more clear. On Friday, we came right in there. Look, right into just right around 50%, and the buyers were there and closed right there. Today, we opened bearish. It came a little lower, right to the kind of the bottom. The lowest point of the day is right at the bottom of that green box, and buyers came in. So right now, we are just basically consolidating right here in between this red box and this green box right here. So it could continue to trade like this all day today inside here. Yeah, we can scalp and trade in here. But overall, bigger picture, we're on a daily. We want to know what's going to happen this week. So what we're looking for this week is, can the buyers on the daily or 4 hour get it above this red point of control? Get it above here, not just break above impulsively. We also need like an impulse break to create a new higher high. That's what we need. But once it's breaking, is it going to be just a big blue candle that breaks for that new higher high, then get rejected back down? And then that's a fake out, okay? But if it's breaking, it's naturally making that high. But what if the daily candle does close above there? Then what we're going to do is flip that red zone, this bearish control zone, we're going to flip it green. Because if it pulls back in here, this could be where the buyers are positioning themselves to buy that pullback and take it right back up to this yellow line. Maybe back up, you can stretch this zone when it gets up there in the future, okay? That bearish flag, you could extend it across. But that's typically what we're looking for. Right now it's building. Maybe it's still consolidating. It's early in the week. Maybe we will get that move, okay? That's one option, right? That could happen. We could also, what if the sellers come in and continue to push it back down, right? This candle turns black and comes all the way down. Right now it's being held by this bullish point of control. But what happens if the sellers, again, close it below there? You get a black candle that closed below. Then we're going to flip that green zone red. And as the buyers are buying the dip coming back in, that could be a big red zone, gets rejected. Then all of a sudden gold is selling back down to here, to this yellow line, and then back down to that low. And then if it breaks, where could it go? Just look at what's below this yellow line and figure out most important areas. I would be looking at 50% of this candle right there, and also maybe that body to body right there. I would have my lines ready to go, right? If it gets down there, okay, and then continuing just to go down. But that's what we're looking for this week, okay? It might take a while to develop. It's still kind of consolidating in here. Now what we can do is we can start to dissect well, one other thing is if we do continue to push up to this yellow line today and it breaks, the top of the red box, 4,058 is a location. I don't necessarily always need to put a yellow line up there because I know what I'm looking for. I know how important the bottom of the zone is. I know how important the 50%, and I know how important the top is. What I could do is I could drag this up where? To those bodies. To that body, right up there. To that bear flag, right? And then if you really want to consolidate it, there it is. Bearish, bullish, bearish. Kind of see how the volume was kind of consolidating in there and then it just dropped. Okay, so that could be for upside momentum, what we could look for. Now I look at the overall daily pattern. This is another thing I look at. We had this big all-time high push up 9 weeks straight, finally cooled off. This is not a gold crash in the markets. Don't listen to your news outlets that are just causing fear. This is not a crash. This is a pullback. Okay, it drove up to almost 4,400 9 straight weeks in a row without pulling back. So it's pulled back down to 3,900. Still it's still, this could be a higher low, and then it's kind of just flagging in here. So this is the block we got, buyers got to break through this week. If it can break through here, could have that leg coming back up, coming back, and then we could be driving into that big block and the all-time high block, right? Right? We have levels above us. When it gets up there, that's where sellers could be, and then they push it right back down. Okay, it could come all the way to the all-time high and be a double top, and then they push it back down. Or it could be having large momentum and gold is breaking, and then all of a sudden we're trading at 4,500 going to 5,000. Okay, but we have to go through each one. We have to test this level before we can get to this yellow line. We got to test this yellow line before we can get to this red block. When we get to this red block, we got to see what happens here before we can get up there. We can't count all of our chickens before they hatch, right? You got to go through this. In order even to sell down, we got to close below this green box in order to test this yellow line, to test this yellow line, to continue to go down here. These are all levels in the market, critical points of interest on the daily. Okay. So now what I do is I move into off the daily into the 4 hour. Now I see how the 4 hour candles are moving. So this is now dissecting the daily. There's a beautiful M double top. Okay. So the way how I explained it on the daily, that double top is not there. It was produced on the 4 hour. There was one top. There's the neckline. Came back up. There's your second top. It doesn't get any more visual than this. And there's your capital M. And it didn't just come down here and go back up. It actually, that big bar closed below the wick and below the structure. So when it closed below, sometimes we're waiting patiently as it comes down. We're waiting for it to come back up and retest. There has been no retest so far on the 4 hour to come back into that block. So when it does come back up here, that's what I'm saying. That could be a good selling point again. Right now, it's continuing to push lower lows. It came back up, but you see the 4 hour candles can't even break above this yellow line. So it comes back down. Held support, came back up. They rejected it, continued push down. Again, we got 4 hour bearish volume closing below all of those wicks. That's where buyers came in, back up. Buyers came in, back up. Buyers came in, back up. But big sellers are there, pushing it right back down. So this double top created a new low, came back up, lower high. They pushed it down. There's the new lower low all the way down there. And again, we're seeing a similar situation right now where it came right back up into here, came back down. Okay, a little higher low from a double bottom, came back up. But you see, we're struggling in this red zone, pushing back down. Now the 4 hour candles are just barcoding bearish, bullish, bearish, bullish, bearish, bullish. So both sides are accumulating. You can see if you really want to trap gold on the 4 hours, you can trap it like this. That's where it's moving right now. If you're trading inside here, it's not, if you're a swing trader, it's not really doing anything right now. So again, we have to wait for a 4 hour candle to physically close above here. Then we make the red zone green. Maybe it comes back in there, 4 hour candle. We're buying our way out of here, and then we're testing this. Then we're testing up here. Okay. That's a possibility, but you see that the buyers have not, they get rejected there. They got rejected there, rejected there, rejected there. Okay. So there's a lot of sellers in this red zone. We need to physically break out of here and close above it and flip this zone so that more orders can come into this block to buy, and then they buy the pullback and we can get in. Okay. But also it could just continue coming down. But you see when it comes down into there, goes back up in that green block, retests it, goes up, touches it, goes back up, comes deep in it, goes back up. Right here, this was Sunday when the market opened. There was the big bearish candle that hit the lowest point of the day, and it came right back up. As we moved up, it broke there, but didn't, and then it came back down bearish engulfing. This was Europe. Europe rejected the move right here, 2 to 6 a.m. Came up and pushed it right back down. Now we're moving up with the pre-New York volume, 6 a.m. We're coming right back up. So we're just literally barcoding. So we could follow this path, this direction, or sellers will step back in and push it. But what they got to do is every time they come in here, there's buyers, buyers. So we have to officially, sellers got to close it below the green zone. So you flip it red, then buyers come in, then they get rejected. Then you'll see the 4 hour sell-off continuing coming down. Okay. Right now, when I'm looking at a 4 hour pattern, I see a double bottom on the 4 hour. Okay. One bottom. There's the big neckline. There's the second bottom is right there, but that's a higher low second bottom. So I can tell that they're trying to artificially push it up. And we're in a W that can't break, but we're in a bull flag. So remember what I say. A bull flag has a high probability of continuing to the upside to continue to do this. We also have a nice double bottom. So it's got a high probability that we're going to maybe continue with gold to break out of here. But every time we come in here, they're rejecting it back down. Coming in, they're rejecting it back down. We might come in again and they might reject it back down. So first thing that we got to do is get a 4-hour candle to close above this wick, above that wick in order to continue to build. Unless we have news and it just blows right through here, okay? But so if you ask me, we could say we're bullish on the 4-hour just because of this, but overall it's still bearish. Okay. If we're buying on the 4-hour, we're still counter trading against the overall trend. Okay. So it's better to wait for confirmations. What we can do now is go into the 1-hour. We can check out what the 1-hour volume is doing. Okay. So now I'm dissecting the daily from the 4-hour to the hourly. Now I can see a little bit more closely as to what happened last night. So there's the open right over here, like kind of 6 p.m. where it dropped. 7 p.m. was the lowest point of the day, came in. There's the futures market, 8 p.m. came up very bullish. 9 p.m., 10 p.m., a little bit of barcoding. There's midnight, 1 a.m., 2 a.m., and right here is London, 3 a.m., and then they brought it down 4 a.m., and then 5 a.m., and slowly we're coming up pre-New York, 6 a.m. and 7 a.m. So again, we're just trading inside here. Now, what I can do is see this big bearish hourly candle from 4 a.m. coming from London. Can we do the same thing that we've been doing on the daily 4-hour? Can we figure out where 50% of that bearish candle is? Yes. Grab our fib tool, opening balance, closing balance. Anything I do on the 1-hour, I use a white line. Whether it's the 4-hour or 1H, I use a white line. Just to let me know, like when I'm scalping 5 minutes, that this is an hourly level. It's not a daily level, it's hourly. Remember, more weight is held at the yellow lines, but I still want to know what's going on the hourly. So 0.5 of that hourly candle is right there. So I can see right now we're moving above it on the hourly, but where's the point of control of that bearish? Okay, point of control is obviously bearish. Look at it, it engulfed that bar, that bar, that bar, and closed below, all the way down there and closed. So sellers had the upper hand at 4 a.m. Now we're coming right back in, but we're transacting in the bearish hourly point of control right here. 382,618. That block right there. I'm making it red. I know it's a big green bullish candle, but it's going to close in 7 minutes and it's transacting in that block right now. So you can see it opened up. It was originally bearish, came down right into there. Lowest, that daily point of interest, yellow line right at 4,000, 4,002, coming right back up, and it pushed. It created the higher high. Remember, you got to create a higher high in order to continue to move, but this is like a counter trade into this big bearish candle. So as it came in there, sellers are rejecting it back down. Where will this body close in the next 7 minutes? Maybe it will close with volume above 50%. Next hour could continue to push out of here. We'll see if we get an hourly candle close above this red zone, then we'll flip it green. Maybe we'll continue to move up. Are we going to move all the way up to this daily yellow line? Possibly, but what I'm also looking at is maybe right there where the 4 a.m. candle opened, 4,019, 4,020. So if I'm scalping and it's coming up there blue, 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 I have to understand that that's where that opening balance was. It could come right in there and sellers are there and then they push it right back down, right? But if it can continue to get above this white line, close above, we'll use this as support to get us to our daily point of interest. Maybe then it'll get us into our red zone. And then you can see if we start transacting in the red zone, there's a wick and a wick that already transacted in there and two big rejections. How can we not acknowledge that point right there? Right there. That was a big bullish hourly candle that came in and they slammed it back down. Next hour again was a big bullish candle coming right back in there and they slammed it back down. If we are driving, let's say today in there, that's why I trade to these lines. If it's coming back in there bullish, history is telling me they slammed it down, they slammed it down there. If it comes in again, they could slam it down again. Yes, it could break above If it does, then I look for closing volume because if it closes, that's resistance, resistance, close above. This white line could turn into support to take me up to that line, right? So that's how exactly, guys, how I trade. And I set my charts every single day and I put alerts at these lines and I just follow the lower time frame volume, how it trades at these levels. Okay. So we have a nice strong hourly bullish candle. Let's go into the 5 minutes and look at the 5 minutes. Okay. So we were talking about patterns. We talked about that 4 hour M pattern. This is the exact same thing. It came up 5 minutes now, came back down, neckline, came back up for the second top. Okay. And look, it was a lower high M. Don't we recognize that? And there's the bearish bar that just closed below the zone. So it didn't just come down here and go back up, like a fake out. It actually closed below there and they extended the move all the way down. Okay. So now we've recovered. We found the bottom and now it's coming right back up, but they could slam it right back down. However, if it closes above, we could continue to move up to that white line. There's that hourly, there's that daily, and then there's that other white line I just talked about. Okay. So right now, it is coming back up. I can see a nice little 5 minute supporting block. Right now, you can look, okay? It's already been created right there. So you can start to draw a zone yourself. I can see it came down in there, back up, came down, back up, came in here, back up, came in here, started to move back up. So if it ever comes back down into here, 3,093, 94, 95, we could be possibly looking to buy gold. Now, what I do is I also go backwards and I look. This is how I learn what I'm doing. Then I can see how it transacted in the past. Right there, you see it was a bearish block right there. It was red, 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 red. Close below, continue push down. There was a bullish candle that closed above that red zone. That's when I flip it green. I saw it came down a little bit and then got right back up and continued. So you can see you could again go in backwards. See right there where it was a fake out where it closed below and right away it came right back in. There's an M pattern breaking and look at where most of the volume was transacting in this zone. Go backwards. See how it kind of represents 50% of that big bullish candle. And you could go all the way backwards. You can see how these zones continue to hold up. Yeah, there is some impulse breaks below and above them, but if you get the picture, that's why when I learned how to go backwards, I got in the habit of learning how to go forward with this. And if it does come back down in here, I could be buying that exact zone with an alert in there and take it back up. Then that would represent the second bottom. All this cluster of volume, consider that one bottom. And then if it ever comes back down, we could get another cluster being a second bottom and taking back up. And then the only thing I do is I look for confirmations. I anticipate that would happen, but maybe the sellers are stronger and they close it below. I flip that red and then I'm selling back down to here where the bigger buyers are. Where the bigger buyers are, then maybe it will be a bigger move coming back up. Okay. So that's exactly how I trade. There's no secret to what I do. I share with you guys exactly what I do. The only thing I do is I add alerts. Like right in there, I see all of those wicks that touched in there, there. I put my cut line and I add an alert in there. And simply right click it, add an alert. I'll have an alert. I don't have to sit and watch my computer all day. If it comes in there, I'll be ready with the alert. So right now we're going into 8 a.m. 2 more minutes to go. You see how it came up, rejected back down, came up, it pushed it right back down. Again, that was a big, strong bullish candle, created that higher high. They rejected it back down. So are we gonna get a close above here blue? That's a shooting star candle coming right back down. Is it going to sell off right at 8 a.m.? Another thing to complement our charts, I can add the daily bar indicator. So I know my opening price. I can look back where we opened at 6 p.m., kind of over here. It was initially bearish when we opened up. We made the lowest point of the day right over here. So I can see it was 7:30 right prior to the futures market. There's the futures 8 p.m., big strong bullish candle coming out of there. We came back up to the opening price. It flipped the candle all the way to the highest point. There it is, London, 305. London pushed it down. It came back up. 4 was the lower high, pushed down. And I can see we're just we're just right above the opening balance right here. And we're pushing right up here. Okay. The candle is a bullish spin top with bullish volume right now, but you can see the range today. It's been all over the place. Okay. And then if you want to add some indicators, a 9 EMA is this green line. We're above the 9 EMA. And finally, the 200 EMA is the purple line. We had a golden crossover right now at 7:30, and we could be continuing to move up bullish. Okay. Let's see how and where this bar closes. Okay. And some of you guys might be already in a buy from the signal. And if you are, fantastic. Hopefully, this thing can continue to push up. Okay, so that's a nice big strong bullish candle pushing through there. The close, did it close above the red box? Yes. So you see what I do? I just go, I make it green. How did the candle open? It opened bullish, ignited, short wick. So it opened and it's popping and continuing to drive. Okay, so my hourly line is the white line up there. If it gets up there, that's the white hourly line. Okay, but I can see right over here to the left of the chart, there's a lot of wicks right here. Can see there's a body, body, a wick, 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 kind of body, body, and wicks. So you see right there, that same red line going across the chart is now could be resistance. See how it just impulsively broke above there and got rejected down, okay, below that red line. So now it's a shooting star candle coming back down. Now just tapped in the top of that green box. Did you see how it got a wick right away and went back up? So it's telling me as soon as it came down there, it just picked up a order of buyers, okay, waiting, pending, patiently waiting in there, and they just got filled. And then as it came back up, sellers are pushing it right back down, but now it's coming right back up to maybe test the opening balance. This is a spin top candle on the 5 minutes. So you still see it's still bearish. It has not flipped that opening balance. Sellers are still pushing it back down. As it came down again, see how it just came right back up? So it picked up another bullish order within the same candle with 3.5 minutes to go. So I can tell that the first 90 seconds of this candle were originally bullish, then it got rejected, came back up, came back down. There it is now. So it flipped the balance again, blue. So it could come back up and fill that wick and continue to go higher. However, this is one of those coin flip candles where it's fighting, where you see it go down, go back up, go back down, go back up. But now you got the buyer momentum continuing to fill the candle, which could continue to take this thing higher. If we're waiting for a close, then we got to wait for the full 3 minutes, right? So the gold buy at 3,998, right? Right above the 4,000 is now moving over 130, 150 pips. Okay. The buy was down like 3,998 was down in here, just at above this resistance right here. So first things first, we're here to learn as well. Did you see how I flipped that red zone as that body of that candle at 755 closed above? And then you guys can now literally see when it came down, see how it retested the top of the green zone and the buyers are there. That's why I flip it green. Someone always asks me, Ron, why do you flip red to green? Because I flip it on the body that represents the closure, because this could now be where traders are waiting for that pullback. Okay. And now that's a great scalp candle. If you like waited for that and it flips, see the size of the wick as well. See how it's this short wick and it just filled and it's driving now almost 40 plus pips. If you just scalp that candle, that's a great candle. You could be in and out of that candle, or you could be take your stop loss, put it at a break even. You could have also scaled out and left a runner. Okay, that's scalping. If you want to scalp individual candles, okay, I understand. Even scalpers want bigger moves to come all the way up here. But some scalpers just trade individual candlesticks, okay? And you got to know how to reduce your risk when you're in profit, especially at 40, 50 pips in one single candle. We haven't seen this type of volume in years in gold, Okay. We're seeing 100 pip candles. Okay. You could literally hit your daily goal in just a few candles these days. But you could also go into a heavy loss if you don't know what you're doing these days as well. Okay. So, and then what I do if I'm trading and I'm still in it and it hits one of these targets, like a white line or a yellow line, I absolutely do something at these lines, regardless of what could happen or what should happen or where it could go. I don't trade like that. Okay. That's the difference between me and other traders. Some traders, they got targets up to there and they're willing to wait all day, the ups and downs and the pullbacks and this and that. I don't do that. Okay. I'm not, I'm a scalper. I told you guys for 6 years now. Okay, so there was a big rejection into the close. Rejected, rejected, rejected. Okay, so now it closed right there. It just opened bullish. You see how it came up? Did it fill that prior wick and come all the way back up? No, it's a lower high so far, and they're trying to push it down. But you see this red line? I didn't just pick this red line just because. I went back and I looked. There was a body and a body. If you continue to go backwards, it's the same red line. You can see how it was resistance at one point where no volume closed above and they pushed it down. Here's where we had volume close above and look at it continued to move higher. This is the first now blue body that has closed above it. So now we're seeing, will this red line hold as support right now, or are the sellers going to close it below there? And this red line is still resistance, and that looks kind of like a little fake out move that went up, and maybe it will push back down. We could either look to buy pullbacks. I'm going to place an alert here at the white line right at 50% of that zone. If it comes in there, I might be looking to take a buy at 4,010, 4,009. I'll get it on a discount. Instead of buying here at 4,014 or 15, I get a 50 pip discount right there. And I could buy right at the hourly support and in that mid of that green bar, and then maybe it goes back up. Okay. Just entertaining a buy. Yeah, because it could come down. Let's say it's coming down very bearish. If it's coming down very bearish, I don't want to just buy because it could come all the way bearish below there and close. And then like I buy and then it closes below there. Then all of a sudden this is resistance. I'm still in that buy and then it's going down there. Okay. But it's just a point of interest where I place an alert where I watch if it's coming down there. Now you see it's a big bearish candle coming back down. So what I look for is, will it retest this green zone? Will it get a wick, higher low wick? Is it going to come a little deeper down into here? And we also have Comex opening up in 12, 13 minutes as well. So you also have to factor that in. If you take a trade now, you might be in a trade 10 minutes prior to Comex. Comex could come in with additional volume in the market and can either benefit you in a trade or it could go against you in a trade. So these are things that you have to consider. I'm just going to check my spreads right now. Are you guys in a trade right now? Are you guys in a buy, holding the buy? Is anyone trying to sell right now? What are you guys doing? You're not in anything right now, Mikey? Sherry, nothing right now? Okay. So I'm not in anything myself. So what we got to do is we got to analyze. Okay, you're a buy from the signal. Perfect. Okay. But you should also have like a trailing stop loss or, because again, it's a nice bullish move. We can see it. But overall, like it's a lower high from over here. So, like it's a nice, beautiful move. It's kind of like a counter trade into here. Okay. Yes, it could go higher, but this thing could come down again. Okay. And if we're looking to sell, all I see is like one single bar came down and back up. Single bar came down and it went back up. This could be another single bar coming down and it'll go back up. So then we got to kind of look for a second top. And what I do is I see those bodies, I see that red line. I'm already making my red zone on the 5 minutes prior to even this candle even closing. Okay. So I'm kind of already into this. And then I kind of back test. Look, I go backwards and I see exactly that bearish engulfing candle started right there as well. And that's where it pushed down. So you see it's right there at those bodies. Okay. So this could be now to show me, are the sellers here for real or are the buyers going to flip this and continue driving this? Here's the close in 10 seconds. See how that was big bearish candle came all the way down. Again, higher low. Buyers are stepping right back in. The volume might close right in this zone or right above it. It could, okay, so look at they pushed it right back down, closed it right below the zone, right at the last second, and we're opening bearish again at 810. We'll see if it will continue to drive down these wicks. However, if it continues to hold, might break out bullish, but we have no closing volume above the zone yet. Okay. So if it does break out, it's an impulse breakout, which could impulsively fill that wick, but we have no closing volume. Okay. So it could just, and it could come up even above this wick and get right up to here, and it will still be a lower high and they could push it right back down. Okay. So you got to ask yourself now, if you take a buy, you're still trading with this overall trend. It's a You're trading with the trend. It's okay. But the only thing is you're trading on an impulse. That's it. That's the only thing. But if you have intuition that it could fill and continue to break out of here, then continue with your buy. Okay. Because I see sellers are here, but look, they're not creating any new lows. Okay. Every time they push it down, came back up. That was a big black candle, came down, but they didn't even get below that low. Buyer stepped in with a higher low. But we've got lower high, and a lower high, and volume transacting in this block. Okay, so might as well just, I'm going to wait it out. Okay, I see some barcoding, bullish, bearish, bullish. Maybe I'll wait another 7 minutes. I'll allow Comex to open up, and I'll trade with the Comex volume. Like this is great if you got in at the buy at the signal or in here. But like for me, just think about it, guys. If you guys got in already down in here, you think it's good if I just buy right now at the highest point, basically going into Comex when I've got upper resistance? You got to kind of weigh the risk with the reward. Yes, it could go a little higher, but the risk is not in my favor, right? Because what if they just slam it down? I'm buying at the highest point, and then I'm going to go in heavy drawdown when I could just be waiting to buy down in here. If I'm willing to buy, let's say your mindset is set on a buy, just train your mindset to wait for a pullback. Sometimes it happens, sometimes it doesn't. Okay, we're all adults here. I wish I could tell you every single time we wait for a pullback, it's going to come in here. We're all going to buy a pullback. We're all going to have zero drawdown and we're going to go in profit. I would love to tell you that, but that's not the case. But you still got to have some type of rule when you're trading. Like, I know I want to buy this candle so bad. When it broke out of it, I want to buy it. But I'm also in the back of my mind is even if it goes up just a little bit, what if they slam it down? Okay. So maybe I gotta just give up those few extra pips and wait for a good setup. This is more for the buyers who already bought down in here. This is for you guys. Like, this is your run. For me to buy the highest point, it's dangerous, right? You don't want to get in the habit of doing that. Ask any FOMO trader, have they been successful over time just FOMO trading? Probably not. Ask any patient discipline trader over time, have they been profitable? Ask them that same question. I guarantee you, those traders who are patient and disciplined have more to show for than just a FOMO trader. A FOMO trader can get lucky here and there, but to do it every single day on every single breakout candle, it's not going to happen. I'm sorry. So we got one more minute. Okay. So I follow. Did it break above that high? Yes, it did. So technically it created a higher high. So this thing could continue to go higher, right? But we do have a little bit of a rejection. This might be the first bullish candle closing above this red zone we've had. We haven't seen this yet. That was an impulse that came. Look at where it closed, right at the zone and went back down. So this might be our first one. So maybe if we're looking to buy a pullback, we might look here at 4,013, 14. But it doesn't always have to be just buy pullbacks. I could be looking to sell if it gets right up to here. See the daily point of interest? There was already that heavy push down right there. What if those sellers are waiting again by Comex to sell right here at 4,025? So yes, I'm waiting for to buy a pullback, but what happens if it just keeps driving up to there and it gets really overbought? I could be looking to sell that and bring it down to those buyers that want to buy those pullbacks. I could benefit maybe on a sell, close my position, and then buy back that pullback back up, right? That's two-way trading. But you have to be very, very disciplined if that's how you want to trade. Okay. But I have to acknowledge that up there. Okay. Because that's when it came up. That was that lower leg that pushed this whole thing down. Now it's coming up slowly. So that blue volume, did it technically close above the red zone? Yes. Okay. So again, I just go through here. It pulls back, could look to hold. But I also look now at the time, 4.5 minutes to go, and it's going to be Comex market open. So you got to ask yourself, like, do you want to take a trade right now prior to the Comex market open? You can. This is where maybe if you want to do a feeler trade, whether you're feeling a buy or a sell, go in small. I'm just telling you, because if it's big volume, come in, you're not destroying your account. That's what a feeler trade is. It shouldn't even go against you on your profit loss or journal. It's just to test the water. You know, when you go to the beach, you put your feet in the water, you don't just go in and dive in. Some people do that, but some people just like to get a feel of the water. If you go in a hot tub, not too many people can just jump right into the hot tub. They got to put their feet in slowly, get their body used to the temperature, and then go in. Same with trading, same analogy. You can go in a little smaller if you're looking for buys or sells. And if it goes against you, you can easily cut it. It shouldn't affect your psychology. You shouldn't revenge trade. You shouldn't. It's just you're learning from it, okay? And smallest size possible, micros, like where it's 10 cents per point. If you go down 30 points, okay, you might be down $3, $3. But if you're trading with a $50,000 prop firm account, $100,000 prop firm, and you go down $3, you're not gonna blow your breach, your daily drawdown. It's not enough to, even if you're trading with live money, your real money. If you lose $3, it's a cup of coffee. It's not like you're losing $300 or $3,000. Okay. It's a completely different psychology. And then maybe that feeler trade could take you understanding what's going on and to get you into your official trade. Okay. If you don't, then just, I'm waiting for market open for Comex in the next 2.5 minutes. It's still driving bullish. Okay. It's still making higher highs. Volume is closing above. Still pushing up. If I grab my Fibonacci tool from this last leg down, that pushed all the way down to here, I could see exactly where I'm trading at with the ratio. So right there, that was that highest point that pushed it all the way down. Now I'm looking at the highest and the lowest points, the entire range, the wicks to the wicks. So the first one should be a pullback right here to 23.6. You see how I got to reverse my numbers. Okay. So the first pullback was right there, 23.6. There was 38.2. There's the zero point 0.5 right in the box. 618, we are above it. So now we're trading at the 78.6. So if we're looking to sell a discount, like if we wanted to sell right there, right there, right there, or right there, we're almost getting an 80% premium discount, premium to sell up here. Like there was sellers that started selling here and they got caught and it's still moving up. So if we're looking for sells, we're selling at a premium area. Here, it would be better, obviously, to sell at the red zone because we're getting basically 100% premium to sell up here where those original sellers sold it down. Okay. So you can see we're having a little difficulty just below this hourly white line where it's struggling to kind of break above with 1 minute to go. So Comex could open and continue to squeeze its way up here, get up there, and then maybe potentially pull back, or it could open bearish and just start selling off. But you got to remember, if it sells off, it could sell into zones where there's buyers waiting. Okay. So let's watch how this thing opens. And you got to pick a direction, what you want to trade. Do you want to sell or do you want to buy? Okay. If you're looking to buy, you're looking to buy pullbacks down in here. If you're looking to sell, we're getting to a premium area where we could be entertaining sells. But I want to see it hasn't tapped into that hourly white line as of yet. And we got 10 more seconds to go. So Comex market opens now at 8:20 a.m. Eastern. Normally we have some 8:30 North American news, but right now with the US government shutdown, everything is tentative. So it opened bearish, ignited, okay, and then just flipped. Okay, so remember how it just opened bearish, ignited, came down. Now we tapped right into that hourly, got rejected, coming back up. This candle could now flip bearish if unless it holds its bullish momentum. But you see, now at least we tapped into an hourly resistance, okay? So now I could look to sell this thing. Okay, I just want to see if it catches a wick at 50% of this candle and maybe comes back up. I want to sell that leg going down. So you see more of the sellers engaged right at that hourly white line. Okay, so I'm looking to see if this thing can get a wick. No, it's heavy volume. Damn. So there's the wick right now. Okay, so now it's coming back up. Now I got to see how it will react at that opening balance. Are the sellers still there? Okay, I'm going to go into sell. The sellers are still there. Now, this is just like the one-to-one risk to reward when I set this thing. I can manipulate it where I want my stop loss now. Do I want it just right above Comex's wick? That's a very, very tight stop loss. Do I want to go maybe a little higher if it comes up? Do I want to go all the way up to that red zone? I could, okay, but just going to go halfway. Where? Halfway is I see this wick right there of this candle at 4:15 a.m. Eastern. Maybe I just want to be a little bit above it, okay? And then I'm looking to maybe transact back down into here. If it comes down, if the sellers can push it down, if I'm still in this, maybe to break down to come into 50% in there, okay? So I'm testing this hourly resistance during Comex to see if the sellers are here, okay? If they're not here, the buyers will prove to me they'll come back up here, and I want to get out of the way. I no longer want to be in the trade because if it starts closing above here, then they could break this daily zone and look at the daily candle could be filling up to there and it could be a daily bullish candle and I don't want any more risk in the trade, okay? So now I got to continue to watch now the closing price. I can't panic now when I take a trade, okay? Because I've already measured my stop loss. I already know from here to there if I lose how much I'm losing. I've already calculated it in my head, so I'm not guessing now. So it's within my daily risk. If I lose this trade, I still have multiple trades to take for the rest of the day where this trade is not going to destroy me. This trade is not going to blow up my count. This trade is not going to take away all of my daily profit if I've been trading earlier in the day. Okay, so you got to really understand each trade when you take, how much you're risking, what you're looking for. So just, I like to measure into, if it comes into this green box, if I'm still in it and it's in profit, it's running about 35 pips in there. That's when maybe if I'm still in it, I can start to reduce my stop loss, bring it down, reduce risk. Okay. But if it can ultimately break through there, then it could be 50, turning into 60, 70 pips. But first location is we got to, in a sell, we got to get it down to here. Okay. And then I also watch where will the volume close? Will it close bearish engulfed below here? Will it close below 50% of that bullish candle? Will the buyers bring it right back up? Will it close above here? All of these things to consider in the next 90 seconds. So you can see every time it's coming down, it's picking up buyers. It's coming up with that higher low wick. See where the wick is? Right located at the previous close of that body and the open. So it's right there. So it's still holding good support. That's why it would be really nice in a sell situation if we can close below, create a new low and close below that. Then we have a bearish engulfing candle and we can continue the momentum maybe on our next 5 minute candle. And we could at least figure out a point of control of this bearish candle. Okay. So all of these things to consider. But I can't do anything until the body closes. So yes, it's dropping in profit. It came down there. It was about 15, 20 pips in profit, but that's again not what I'm just looking for. I'm not just looking for a 15 pip trade, 20 pip trade. Waiting for this body to close. It's going in a little bit of drawdown, a little bit of profit, a little bit of drawdown, a little bit of profit. So this is not one of those trades that you take and it's automatically in profit with zero drawdown. You can see it's realizing a little bit of drawdown. It's realizing a little bit. Okay, there's the close now. Did we fully engulf that? No. Okay, can I cut that bearish candle in half? Yes. See how I just draw the cut line right away? I did not use my fib tool. Sometimes you got to be very, very fast. Okay, so that's just me guessing where's 50% of the candle. Okay, if you have time, you don't need to guess. Grab your Fibonacci, open, close. See right there, I am at my 50%. If you want to draw like a point of control of that bearish candle, you can. Okay, will it hold up? I don't know, but you can still draw it. There's me drawing it. So we're trading right in it right now. So now we're transacting in that point of control. So you see how it just got rejected right at 50% and that point of control? So it transacted in there already. Okay. So we got rejected. That's what I want as a seller. So I got my shooting star candle coming down now. Now I just got to fill these prior wicks to come down naturally into that green zone. I have it already measured. If we trade into that green zone, would be about 30 to 35 pips in there. Then if it comes in there, I know I'm transacting where buyers are patiently waiting. So then if it comes in there and shoots all the way back up, I just want to kind of reduce my risk in the trade so I can no longer maybe encounter drawdown. Okay. But we have not broke those lows yet. So now buyers again are coming right back in as it came in. Now sellers are offering at that opening balance. Buyers are coming back in. So now we're transacting back in that red zone and we're barcoding bullish, bearish, bullish. Okay, so it sucks as a seller to see barcoding. I want to, just break down, but I'm going against buyers, right? I'm trying to go with the overall momentum of selling. I waited for Comex to open up, tag that hourly resistance. It got pushed down, but you can see how strong buyers are bringing it right back up. Okay, but again, I can't decide until it officially closes. Will it close above there? No, sellers are still there holding it down. Okay, so how many times have we came in here? 2, 3 times in that candle. Sellers are there rejecting it back down. There's the shooting star candle. Broke now those wicks. So we created that lower low. You see, it did create the low, and then see how it spiked right back up green because we just encountered some buy orders. So we got to continue. We picked up those buy orders, but we got to continue offering and transact even through here. Okay, so we're at the top of that green box right now. Top of the green box is approximately 25 pips. Inside is 30, down into the bottom is about 35, 40. Okay. But let's see. Some of you guys might be already reduced risk. I haven't yet. Okay. Looking to maybe break through here, come down a little lower. We also have a spin top candle with 2 minutes to go. Indecision, right? Seller's still there. And then there's that 9 EMA. Some of you guys use that 9 EMA. It's located right exactly at 50% of that green zone. So it could come down there and you guys know, could catch a wick and go back up. But I'm also, if I'm staying in this for the next 2 minutes, I want to see, can this bearish volume close below these previous wicks? Can I get one more bear candle continuing to break down? But this thing could swing back up on me and then it could produce a double top up here. And then the second leg might be the more powerful leg to push down, because this might not be enough volume to break through here. So as it comes back up, maybe a second leg might be the more powerful one to push this entire move down. And the close is in one more minute. So you see how the volume is coming right back to the lowest point. Now we got to come down to the lowest point and break for a new lower low. Okay, now we're transacting right in that green zone, right? So if you wanted to buy pullbacks, remember you could have bought a pullback now in there. So right in there, guys, that's 30 plus pips. Now is the time to start reducing risk. So I can now reduce it above that wick. I just remember I was above that red line. I've reduced it. Okay. I'm not at a break even yet, but I've reduced my risk. Okay. How much have I reduced it by? I've reduced it by 25 pips. Okay. So I'm now, okay. So close right in there. Bullish ignited. Again, get your cut line to 50% of that volume right there. Okay. And now see how it opened bullish ignited came up. They've already rejected it. We just got to break that and then start pushing. There's the push down. There's 40 plus pips. Now I'm going to a break even. Shit, sorry. Now I'm going to a break even. Okay. And my next thing to do is now take out some profit and not be greedy. It's 40, 45, 50 pips. I'm going to take out 80%. Okay. That's it. That's kind of what I was looking for in this trade. That's it. Get in, get out. I've got now 20% running. So I took out 80% at the bottom of that candle because it could reverse and come back up. Okay. Remember, bigger buyers are waiting down in here. So I want to sell into the buyers and allow the buyers to bring it right back up. If it wants to continue to go down, great. That's why I have a runner for. But the bulk of the trade, breaking that block, 40 to 50 pips, I want my money in my pocket. And then now I leave it to go 20% break even because, like we said, the buyers could be waiting in here, those patient buyers. We are exchanging it to them. I sold into where the buyers are. I want out because they might be buying this and bringing it right back up on discount. Okay. But you can see now it's running 60 pips. And then we really have to respect that white line. Okay. That's 75 pips down there. That's where I'm going to close. If it comes down relative close to this area, I'm going to close the remaining 20% and get out of this entire trade. Right. But if 20% comes all the way back up and hits my break even, I'm okay with that. Okay. I'm not risking any of my capital. I'm not losing any of my money. All I'm doing is just giving away a little bit of profit. That's fine. I can continue to trade after that, no problems. But it's kind of demoralizing if it comes all the way down and you haven't taken out anything, and then it comes all the way back up and hits either a break even, you haven't taken out anything. Some traders don't even go to break even and it comes up and then starts hitting your stop loss. And you see, guys, how that big bullish candle, where did it print? Right just above there. And see how it's coming back up? That's what I'm telling you. You got to get in a habit of selling where the buyers are. And then when you're in a buy, you buy and then you exchange it where the sellers are. Like if you're buying here and it continues to go all the way back up, there's the big red block. That's where the big sellers are. If you're in a buy, again, that's where what you want to close because that's where the next move might come back down. Just trading waves, up, down, up, down. Okay, so any questions about that? Okay, so I waited for it to come up. 820 was Comex, big exchange. I waited for it. I saw how it tapped into the white line. I didn't just place this white line just because there we did our top down analysis. So I know then it triggered the hourly resistance. I saw the rejection, and as it was coming down, went back up, came down. I went in the sell. I placed my stop loss. I could have got away with my stop loss right above that and still been alive, but I placed it above there. Gave it a little bit of breathing room. I didn't have to encounter that, but when it came down, it went back up. Remember, it came up a little bit. I encountered a little bit of drawdown. Continued. It was fighting drawdown, profit, drawdown, profit. Finally, it started to push down. Okay, so I still have 20% running. I'm still in this thing, but looks like a big body candle coming back up, but let's follow it. Lower high, where will it close? It's a spin top, lots of indecision. So when it came down there, it triggered a lot of buy orders. They brought it right back up, but again, it's look at the closing price. one more minute to go, and sellers are there offering and continue pushing it down. If it closes below this green zone, this block, I make it red to represent that the sellers are still in control. If it closes in the green zone, it's showing me that it's still a green zone. Next bar could be bullish coming right back up. All I do with these zones is extend into the future, extend into the future. Do you guys have any questions about that? And I kind of look like these days I look for 50 pip trades. Normally I'm looking for 20 as a scalper. If I can get 50, it's like two times more, two and a half times more than what I normally look for. So I can't get greedy. I know some of you guys want more. Then you gotta, unfortunately, you gotta hold the trade longer. You gotta hold the trade longer and let it play out. Look at this. So it came all the way down there, triggered that big green box. If that's what I was saying, guys, if you want to buy the pullback, that's where you buy the pullback in there. You could be in profit by buying the pullback. I was just selling into you guys down there. And then you see how it closed, ignited, coming right back up. So there, that's it. Kind of, I'm going to get triggered at my break even. I'll tell you when. They haven't got me yet. So you see what can go down can come right back up. Okay, now I just got tapped out of the break even. So that 20% is gone, right? I know scalping is not for everybody. It's a different style of trading. You have to be very, very disciplined. That's why it's hard to teach live. It's very difficult because a lot of traders are not on the same page as me as a scalper. They're looking for bigger move. I'm looking for a bigger move too. Don't get me wrong. I would have loved if it sold and came all the way down there. Okay. But I respect this zone. I respect this zone more. Why? Because there's a white line there. The white line represents hourly. This block right here just represents those previous 5-minute candles. It's important, and look at how it's bringing the market back up. Okay, so you got to understand it's a two-way street when you're trading. I'm not one of those traders that just buys positions all day, just looks to buy. There's other traders that look to sell all day. I'm a two-way trader. I'll buy, I'll sell. I'll buy, I'll sell. I move with the markets. I'm not a one-way trader. There is traders that just go one way. I go both ways. Okay. But I understand if I'm counter trading or if I'm trading with the trend. That's a different story. So me, I know that I sold at a great time right here, but I know I'm going against buyers. So that's why you gotta get out of the way, get your money and get out. If it closed below here, we could have continued to push down, but that was good enough candle coming down as it started moving down 30, 40 pips. First thing I did was reduce my risk to break even. And then as it moved to into here, I told you, take out 80%, leave the rest running. And then also your runner is a learning experience. Now you can see, you can learn from it. If you didn't take out and you got stopped out at break even, then you got to learn. Some traders, believe it or not, don't even trade with break evens. So they allow that trade to go all the way down there and come back up and they're in drawdown again. And when you're in drawdown, the market knows where your stop loss is. So then that goes against you as an L in your journal, where you were in a profitable trade, but your silly risk management made you get an L. And then you're going to be mad. Who are you mad at? You should be mad at yourself. Don't be mad at the market. We always are quick to say the market is it's rigged. Oh my God, it's the market makers are after me. No, it's not. It's you. If you were in profit on that trade and you don't do anything, the market is just moving. Gold is moving where it wants to. You think you and I can affect the price of gold? Come on. Gold is moving regardless. Whether we're in it in a trade or we're on the sidelines, gold is moving up and down, up and down. It's got nothing to do with you and I. Us as traders, our job is to manage our account and manage our risk. That's it. That's our job as traders. Stop blame. I know it's just fun and games to blame the markets, and we get pissed off at the how corrupt the markets are, this or that. But at the end of the day, it's you and I. I realized that a long time ago. When I stopped making excuses and started taking trading more serious, I found that I was the problem, not the market makers. It's quick to say that the market makers do this, they do that. Yes, they do that. They do manipulate the prices. Believe me, I know how they manipulate the prices more than probably anybody on this call here. But me sitting making excuses about them and not myself is not right, guys. We all got to be adults at the end of the day, and if we screw up, it's on us. Not the broker, not the market maker. We screwed up. So we got to learn how to fix that. That's why I'm very disciplined with my trading. And I don't worry about the woulda, shoulda, couldas. Okay? I could have held that trade down there, anticipating, hoping, praying to God that it's going to continue to go down there and make more money. But I don't. Okay? I don't play these woulda, shoulda, coulda games. Ever since I started learning to not play those games and play just like a baseball game, hit the ball from here, go to there. You go from first base, second base, third base, get your money out and get out of there. It's like hitting a triple in baseball. Okay. Yes, in baseball, we want to always hit home runs every time, but a single and a double gets the job done. Okay, now continue. That remember that red point of control of that candle? When I stretched it into the future, now this body is closed above it. So that now that point of control, if we're still using that, is now a bullish point of control. So you can see now we've got a little bit of a pattern now. Now we came up. I can see where the neckline is, this green box. I can see how it sold off down there, but the buyers can, and now it's coming back up. Remember what I said? The second leg might be the more powerful, strong leg. So we got to see this leg now coming down. Maybe we'll physically close below there, retest this, and then we drop further down. Okay. That could be that M path if we get it coming down. Okay. But however, it could just come down, pick up a higher low, and we're continuing to drive right back up to that red zone. Okay. So if you're not in a trade now, do you want to take the next candle or do you want to relax now, figure out what's going on, have a drink of coffee, look at your spreads, look at did you make some profit, think about your plan for your next trade, how much are you risking on your next trade? All of these things, guys, should become automatic, right? We're not gambling. It's not just to say, let's buy or sell this next candle. No, like I don't know if you guys see what I'm doing behind the scenes. I'm now calculating in my head, how much profit did I just make on that? How much am I willing to risk on my next trade? Things like that. That's called account management. That's what we need to learn here, guys. It's not just getting excited and buying or selling the next candle. We've got a job to do, right? So, Joe, speaking of baseball, the World Series was the best you've seen in a while. Same with me, man. That I'm a big Blue Jays fan, but regardless, that was one of the best, most exciting World Series I have ever seen in my entire lifetime. It went actually 8 games. The one game went 19 innings. It was unbelievable. Unbelievable. Blue Jays have a lot of young talent. A lot of their talent, believe it or not, were just prospects. Like the pitcher Yasavich, he's 22 years old. He was a nobody. They brought him up. Like a lot of those players um, were all young prospects. I know the Dodgers, they've got a $2 billion payroll of their four-star players. Blue Jays are nowhere near that. But it was great. But a lot of things. I look back at it, that ball that got lodged under, I that was a playable ball. He could have picked that up and grabbed that. That was a really risky move, but I give those outfielders respect how they stopped play because that would have cashed in a runner and put him on third. But we'll be there next year again. Okay. Um, Now, do you guys see what's happening at the white line? Okay, the white line is hourly. So what I do is now bring it down to the bodies. Okay, so you see there's the double top happening live. Okay, I'm just gonna get rid of this inside box and we'll focus on this one. So you see right there, see how it came up. I sold that leg coming down, cashed out, and then it came back up again, broke impulsively, created the higher high, but closed right below there, and now we're pushing down. So we really got to now watch and see. This is the second leg. Will the sellers be able to push it back down and close it below this green zone? See how they failed right there? It was a big push down, but those buyers brought it right back up and they're struggling now getting above there. So it could come back down here and sell back down. However, if it holds, buyers are coming back in. Again, where could it move? We could go back above here, close above there, retest this, and we could buy to take it up to 4,024.25 to that daily position up there. The only reason I have this red line across here is letting me know that that was the previous 5-minute high. Yeah, the Blue Jays have 12 rookies in the World Series. It's unbelievable. It's like, when they say David versus Goliath, that typically was it. Like, it's okay. Toronto Blue Jays will address the offseason, get what they need. We need a stronger bullpen, make some trades, sign the players that we need to keep there. Aaron Judge from the Yankees, he said he'd love to play in Toronto. If we could get Judge coming to Toronto, I think that might solidify the World Series for us. That guy's a machine. Yeah, Springer Springer got nailed by those pitches. It was like he was a magnet for the pitchers. Okay. So guys, this is where we could possibly entertain another sell on this second leg. Okay. However, every time it's coming down, I see higher lows and it could continue to push up. So the best thing to do is let's see, maybe can it transact back down in here? Will it close below there? If it's coming back up, then buyers prove to me it's stronger and could just continue moving. Okay. So you see, that was a nice sell, but buyers are there coming back up. So the second leg, will it have the stronger selling leg? Right now, unfortunately, it's not. Okay. So it came back in, but now it's pushing back. I love scalping this candle. As soon as it came right back up blue, I love to be in that sell right now with my stop loss above there. Okay. I don't want to get too aggressive with you guys, but that's normally what I look for when I'm trading. Okay. Just going to take it easy because it is 8:45 right now and a new 15-minute candle just opened up. And then we're going to do some analysis on US 30 and Nasdaq and get ready for Wall Street. Okay. News-wise, did we have any news today? We already went over this, but really quickly, you see we had no 8:30 news coming out of Comex. We do have some 9:45 final manufacturing PMI coming out, and then there is this red folder 10 a.m. coming out, ISM manufacturing at 10 a.m. That's kind of when we're wrapping up the call. But if you're going to trade after the fact, keep in mind that that's a very high volatile folder. And then for learning and education, when I say that the second leg has a higher probability of being more volume coming down, let's kind of back test that. Let's see if that's the case. So this is the second leg right now. Let's see if it's got volume to continue to push down. Okay. And then if this doesn't happen, then we know that the buyers are strong and could technically continue to take it for a new higher high. Okay. See those equal lows right now, kind of at that 9 EMA. So sellers have tried 2 attempts now to push it below there, and buyers are rejecting it. Now it's coming right back down. Here's the close in 2.5 minutes. So this is the first half of this candle. It's kind of like a baseball game. You're halfway through the baseball game. The Dodgers were winning, the Blue Jays were winning, the Dodgers were winning, the Blue Jays were winning. It's a game of back and forth now. But when this bar closes, that's kind of the final inning. That will dictate who wins the game of this candle. Right now, it's the black team is winning this. So you guys are learning about the second top. That was the first top. This is the second top. Second top, I always say, traditionally has more momentum to continue to push down. Why? Because now it's got 2 times more sellers up here. Maybe more sellers offered to continue to push us down. But while that's happening, this block could be getting buyers also accumulating in here as well, right? So that's why it's also helpful if you have like a level 2 analysis where you can see a deeper depth of analysis. You can see the actual pending orders in the market, and you can see if more orders in this block are asking to trade in here, or if there's more orders on, or if there's more orders bidding in this block. If there's more bids, that's telling me that there's more sellers in here. If there's more asking in this block, it's telling me that there's more buyers in here. Then when it comes in there, after the final transactions, you can see what the delta is. The delta will represent the buyers minus the sellers and will give you the total where you can see if it's negative 50, let's say, for example, that tells me when it transacted in that block, there was 50 more sellers, 50 more offers than there was buyers. If it transacts in there and then the candle closes and then it shows me that the delta is positive 50, it shows me after all of those transactions, it showed me 50 more buying transactions than sellers. So that's if you need help with the level two analysis. Do you need it? Not necessarily, but does it help? Absolutely. It's like having another indicator alongside with you. Okay. And a lot of those depth of market charts are paid through another platform. But if you're a beginner, learn candlesticks first. Then the more advanced you get, then you can introduce a depth of market. It's either Bookmap, Quant Tower, Ninja Trader, I believe Trading View on the. I don't know if they have like the real in-depth level two analysis. Okay, so you see where it came down to, we're still pushing down, right? And then this is the supporting area that needs to break below. Okay. We can see on that previous sell, we broke through it, but look, it picked up all those buyers and closed back above. That started this bullish leg. So if sellers can close below here, you'll flip that zone green to red, and maybe we'll continue to push down even further, right? And then you see where all of everything is developing at the white line. That's the hourly. Also, where the big buyers came in was right near this white line. Okay. So sometimes I like to trade right into these lines. However, sometimes when it's coming down, I'm happy with 50, 60, 70 pips and I take my money and I get out. Okay. Regardless if it hits this line or not, it came pretty close to it. Doesn't have to hit exactly. Is there any questions about what I'm talking about right now? Because this is a great time, guys. We're not on YouTube. It's just you and I on here. If you have a question about anything, hopefully I explained it correctly to you guys, where maybe I answered your questions. But if you have anything, now's the time because I'm going to move over and we've got to do US 30 and Nasdaq. Okay. And if you're going to continue to trade this, just right now, we're consolidating right now. You can see inside here below the red zone and above the green box. You can make it neutral and you can see what the market is clearly doing. It went up, sellers brought it right back down. It came back up, sellers are trying to bring it right back down, and buyers are. So it could just go up, down, continue to accumulate for a little bit, but eventually gold is not just going to stay inside here. If we have enough sellers accumulating, they will start to redistribute it to the downside. If buyers are accumulating, they will bring it right back up and they will redistribute it to the upside above here. So right now we are in a phase of accumulation. And eventually, either the buyers or the sellers will redistribute this volume. But if we recognize a pattern, maybe then it's got probabilities that it might move in that direction. So right now, it's got a double top where it came up one time. We sold the first leg, came back up. Here's the second leg. But the second leg is struggling, breaking down. So it's not getting down there. But if it closes below there, might retest this. It's got a high probability it will continue to fill that wick and maybe drop down to the bottom of the green box. And there's your 200 EMA right there. 4007, James Bond, maybe it might break a little bit down to 0.5. And then you really have to respect if it comes down there where all of this support came in on the 5 minutes. There was body there, wick, wick, body, body. So if it comes down there and you're still in a sell, you gotta acknowledge this area. Like, because it could come down there and just stop and go right back up. And then I know this red line will prevent it from breaking to the opening balance right there. And you got to respect that red line. Look at when it right there. The past shows you exactly how it was trading. Okay. So we'll come back. We'll revisit gold later on. But right now, you still see sellers can't break it down there. So it's coming right back up. But every wick is a lower high, lower high, lower high. There is buyers interested, but they're not breaking it up for a new high. Okay. So You see now how we have indecision in the market. Okay, again, if you want to go in with a feeler trade, you're welcome to test out. Are these sellers strong or the buyers strong? Well, if you get stopped out, you're not risking all of your previous profit. You'll get closed out, that's fine, but then maybe it will give you the information that you need, and then you can close it out and continue to move on, right? Okay, so crystal clear, Christoph? Okay, awesome. Mikey, no questions? Okay, good. Awesome, guys. Okay, so let's move on now. We're gonna do little analysis. It's 8:55, so that if we need to take a break, we'll also take a quick little break. Okay, so I'm gonna start off with Dow Jones, and then we'll move into Nasdaq. Okay, so the Dow, this is how it's moving on the 5 minutes. Again, I don't like to just jump in on the 5 minutes. However, if I did, we can clearly see something. Like what I would be looking at was this 5 minute area created support. Okay. I could stretch that into the future, and I can see now that we are kind of trading right back into that. But we closed below, so that zone has to be red right now. But we're getting very close to, closing above, maybe pushing back up. And then I can see that we kind of just bottomed out right there. And then I can see my next kind of resistance would be, I would say right there. There was a pivot where it came down, stopped. So if I just wanted to trade real quick and not do a top-down analysis and just jump in the market right now, I can see what's going on. Okay. Just from here, from London, 2 a.m., 3 a.m., 4 a.m., 5, I can see how it's moving. So I can see right here, London came all the way up. There's London's high. Big push down. So we found the bottom and now we're coming right back up. So will it come in here, go back down? Will it be a double bottom, come back up and break to here? Why here? Because that was a supporting area. That could be the resistance. If it breaks through there, again, I've got a little area right here where there was some resistance. And then finally, it might get up to the highest London point up there. Like if I wanted to trade zone to zone. Okay. I don't recommend this because I don't know how US 30 was trading maybe on Friday of last week. Maybe I was away from the markets all week. I was on a vacation. So this is not ideal to do. But if you're a scalper and you're just trading one bar at a time, that could give you the information that you're looking for. Okay. But I don't recommend that. What we do, the best practice is start off on the higher time frame, the daily. Okay. I don't even need to talk about this double top over here because I always do. Hopefully that's marked on your charts regardless. You guys know that that was the double top all-time high back in December, almost 1 year, December 2024 was where we had previous all-time high and it dropped. We came in here in the new year, February of this year, and it dropped. All of this Trump madness started in April with tariffs and Liberation Day. The market took a nice sell-off. It wasn't a market crash. It was good recovery. And eventually in the summertime, Powell hinted here, interest rate cuts. On August 22, that was the Jackson Hole Symposium. It's a 3-day event held once per year in Wyoming. And we had that bullish candle close above this big red zone. So just like I do on the 5 minutes, if I look for a 5 minute candle close above, nothing there. If I look for a 5 minute candle close above there, nothing, I'll continue to sell. If there was no 5 minute candle there, I'll continue to sell. If there was, there's the first, like I'm saying it's a daily candle, but that could be like the first 5 minute candle closes above. As soon as that's done, I flip my zone. I respect that there's buyers that could now turn into support. And now I see in the future, it came back 1 week later in there. What were the results? Tag those new buyers and came back up for new all-time highs. Have we came into that zone? We're nowhere near it. Okay. We don't need to entertain that right now, but we've got levels that were created right here. You can see there was wicks to bodies. It was red, red. I'm sorry, it says it's green, but I got to do this a little faster. It's red, red, red. And then here it closed above, you go green. Have we transacted back in that zone? No, we haven't. You can place an alert in there if you like. Now at the all-time high, look at how many times we're rejected up here, okay? So this was Dow's all-time high Wednesday of last week. 48,300. Okay, that was FOMC, all-time high. Now, if I bring my supply down from the all-time high, I've got a wick, a wick, a wick, a wick, and a wick. But I got bodies right there. So all-time high, orange line down to those bodies. I make it red. Okay, so it was now show me. It came in there, back down, red. Came in there, all-time high, back down, close below, red. Came in there again on Thursday, again revisited all-time high. They rejected it back down, red. We came in on Friday at the bottom of it, pushed back down, it's still red. We came in today. Today's highest point is at the bottom of that red zone, and they're rejecting it. So it's all red. Stretch it into the future. Is it going to continue to hold? This is the first time we came in here. So pattern recognition came in one time. Now it's consolidating. Will it come back in for like a second top? And then same thing. Same like the 5 minutes. Second leg might have the traditional higher push down, and then we could look for sells. However, if it closes above here, buyers prove to me they're strong. Okay, I respect them. I'll make that red zone green, and maybe I'll buy a pullback, take it to 49,000, maybe 50,000, new all-time highs. Maybe the Santa Claus rally in mid-December, near the end of the year, could be developing, okay? But we also have to acknowledge that we got a lot of multi-rejections up here where there's a lot of sellers. But every time it comes down, it goes back up, comes down, goes back up, goes down, goes back up. So it's kind of choppy right now. There are kind of a lot of spin top candles. If we look into 50% of this big bullish candle right there, that's where we're trading at. It's still holding support there and there, okay? I don't want to just guess where's 50%. Fib, opening, look, it was an ignited bar, closed. Okay, I was pretty accurate where I placed my 50% right there. I could find the bullish point of control of that day. And if I did, which I do, I find it every single day. I find every candle it's bullish point of control, whether it's a 1 minute, 5 minute, hour. There I found it. Okay, stretched it into the future. Now I can see on Thursday how we transacted right in there, went right back up. Next day, Friday, it broke through there. Okay, so we got lower low, lower low, lower low. We got to give it up to the sellers. They're pushing it down, creating new lows. But when it gets in there, we trigger buyers, bringing it right back up. So we're still above this green zone. So we're kind of consolidating on the daily in between here and here. Again, we're smart. We know that Dow is not just going to continue just to trade inside here. It could maybe all this week, next week, right? But eventually, buyers are accumulating and sellers are accumulating. Buyers accumulate more. I'd like to see it maybe close above 50% of this red zone to take us out for a new all-time high. However, if the sellers are accumulating more, maybe they're pushing it down, but they're not closing below. If I see a black candle on daily close below there, same shit. I go green to red, I could be selling back down into here. Okay. And these are bigger pips. Okay. These are not 50 pip moves. These might be 500 pip moves. Okay. Because this is a daily candles. Okay. But you can treat these as if they're 5 minute candles. Okay. So that's kind of, if we break this green box right there, there's an ignited candle body to body. I want to put that as a point of interest just in case. 47,250 psychological number. Again, if this doesn't hold and it breaks down further, 50% of this bullish candle is right there, right at these bodies, right? You can see how things start to line up. Like right there, body to body, open, close, that's cutting that candle in half. Look at it, the price tag, $46,999.89. It's like we're shopping at Walmart. They rolled it back 11 cents to give us a discount to say it, so it's not at 47,000. Okay, we're getting a little bit cheaper than 47,000. They're making us give us an 11-cent discount, make us retail peasants excited down here. That's what I consider us. We're retail peasants. Okay, so if they want to give us a few crumbs is all we need to live a comfortable life. I'm not trying to be a billionaire. I don't want to be in that class of billionaires. I just want to get in, get my daily goal, and get out and go on with my life. I don't want to become a billionaire. I can't stand billionaires and the elite and the establishments. I'm trying to break them. That's my goal in my life. But if they can give us a little bit down here, we eat, we take our crumbs, and we move on. Okay. Don't get greedy. We take from the rich and they give to the poor, to us. Okay. And we move on. Now, let's look at today's volume. Okay. So, or just recap Friday. So Friday we opened. You see it was originally bullish, lower high. We pushed down to the opening balance. Sellers took control all the way. We created a new low on Friday. But when it came down there, Friday afternoon, buyers brought it right back up and we closed right there. Okay, so can I determine where my closing balance and opening balance is? Yes. Do I see if there was any gap downs, gap ups? No, it's a clean transition from the close to open. When we opened today, it was initially bearish. We can tell that there is a wick on the bottom. So you can see I place a purple line at the lowest point of the day, and it's really, really close to my opening balance. So yes, there was some initial selling pressure, but the buyers came in right away, brought it back to the opening balance. And you see today was really bullish. It came back up. It was big blue candle. It made a new high above Friday's high. And look at where our daily high is right now. It's right located right at the bottom of the red all-time high supply zone. Okay. And it got rejected and sellers are pushing it down right back. We're close to the opening balance. So if Wall Street flips this, it could sell and we could continue to sell down Friday's wick, get into this box, and maybe we break and then we drop lower. Okay. But also buyers could bring it back up. Okay. So points of interest right here. As a scalper, right there, there was a closing balance. Sorry, opening balance on Friday, and that could be where resistance is, right there, white line, a yellow line. If it continues to move up, we're very close to this body, but what I would do is I would cut this candle in half. Why? Because it's got more volume. So just to give me another resistance point right there, again, look at the number. I'm just cutting it visually in half, and it's 47,698. 20 points off of a nice whole psychological number of 47,700. Okay. So if it comes up back up bullish, 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 I got to recognize that that's where sellers could be to push this thing right back down. Okay. Um, and now we go from the daily to the 4 hour. 4 hour candles. Now we can see exactly what time, what 4 hour bar hit the all-time high was Wednesday, 6 a.m. We had FOMC, we had earnings last week, more so to do with Nasdaq, the bigger tech earnings. But this is what we got going on the 4 hours. Okay, 4 hours are very choppy as well. This is where we opened. There was the opening 4 hour candle. There is 10 to 2 a.m. Here's London. Sorry, Europe. Opened. It was initially bearish, came back up bullish, closed right there. This is 6 to 10 a.m. You see we're closing in 53 minutes, this 4 hour candle. So it was originally bullish when it opened, came up, lower high, lower high, lower high. It's below the daily point of interest, below our highest point of day. Sellers are still there. And look, they pushed below Europe's low, created a new lower low right there at 6 a.m. and coming right back up. So maybe this volume, if it closes bearish, maybe we're going to continue with this bearish volume opening up in Wall Street and continue push down somewhere in this green zone. Okay. But it could very well flip and turn back up bullish. But right now it's barcoding bullish, bearish, bullish with some indecision coming from Europe and a bearish candle. So it's still, and then when we're looking to recognize a pattern, I can't really read this shit. It's so hard to tell what's going on. If I was looking at this, we have this overall bullish rally coming up. So if you look at it with this perspective, coming up, if you look at all of this as one top, coming down, we're holding. So we should see it continue to flip back up above this yellow line. Then we could fill those wicks and we move bullish back into here. Okay. However, if you're looking at it with this perspective, where it came in and back down and it's coming back up, maybe that's a lower high and we're pushing now to come back down into the green zone and maybe break for a new low. Okay, so it's whatever your perspective is. I'm going to go with the bearish one, where I see it come back down, create that new low. It came back up, but they've already rejected it. Lower high, and lower lows. So I'm thinking that this volume is going to continue to push down. If you ask me my bias right now, I'm saying US 30 is bearish. Okay, but I'm not a 4 hour trader, so I got to go into the 1 hour. So let me see if my bias holds true on the hourly. Okay, hourly, at least I can see now one top. Neckline is all of this. There's the second top. Traditionally has the stronger leg to break down. So you see it did break down right there, but didn't really close below this green zone. So when it came down there, it came right back up. But right there, there's 8 p.m. futures market. That's what the highest point of the day. It came back down It came back up there. They pinned it. I can see right there at 4 a.m. They pinned it and they're consolidating, continuing. We just hit the lowest point of the day right now. It came back up, but they're rejecting it back down. So if we get hourly volume, do this, Wall Street could sell back down to this green zone. Maybe it comes down there and then it shoots right back up. But what if we get hourly volume, closing below there today and the market continues to sell off? Could possibly happen. We kind of went through the tech earnings last week. Now the market could, reshuffle, but we do have important earnings as well this week too. So they could just continue to consolidate this stuff. If you look on the hourly, okay, is there some hourly points of interest? See how I have a yellow line, but there's hourly bodies right here. There's an hourly body here, body there, a wick there, body there, a body there. I have to place a white line right here. Okay, so you guys know my white lines are hourly lines right there. See what I just did? I see a body, a wick, a body, a body. If I can go backwards, it's kind of cutting this bullish candle, not in half exactly, but you can see there was resistance, wick, wick, wick. Okay, so I got to acknowledge if we're coming back up, I got to see if my 5-minute volume can close above or below that line, just like how I sold gold at that white line. Same thing. Okay, I do the same stuff. Okay, now I can see this big bearish hourly candle. You see this yellow line? I could use this as my cut line now going forward, and it's a daily point of interest. Okay, so if I just kind of wanted to see right now, go with the flow of the market, with the volume, how it's moving, that hourly candle pushed down, had the extension to drive to the lowest point of the day. There's 0.5. If I draw a bearish hourly point of control, it's right there. So I see that we just kind of transacted through it impulsively, lower high, and then it's getting rejected back down. Will it close below here? Possibly. Will we open up at Wall Street and continue to push down with this? Okay, so that's a bearish block in the market that's rejected all of those buyers. Okay. Now we just got to go to 5 minutes, and there's that block in the market. Remember what I was doing earlier when I kind of showed you guys a few zones on those 5 minutes? Now you can see how it kind of came back in, came right in there. Lots of volatility at 9 a.m., broke, came back down, came in, and now they're pushing it back down. So what is the overall trend? Okay, so if I'm drawing a trend from this 430, this high point, I could draw that highest point, connect it A to B. So you see I connect it from wick to wick. I'm now utilizing the range, wick to wick, A to B. And then this is where I just got to continue stretching it, not by manipulating myself and putting up there, just from A to B and continuing to find where C. So I can see that was the trend line from A to B. I can see that they impulsively broke above there. No volume closed above. They rejected it back down, closed below. This bullish bar did technically close above that trend line, and now it's retesting. So we could technically get a positive trade, bullish, going back through here. But if they continue to get this volume below here, we could still be descending our way down to the lowest point of the day, to the purple line. Okay, and if we break this purple line today, there's the top of the green box, but there's got to be something in between here. What I do is then I look last time, purple and green box, when it was trading right there. You can see when it came down, got a wick, went right back up. Came down here, got a wick, went right back up. Came down here, a wick, a wick. There's a wick, 50% of that. So when I'm drawing, looking right there, I got that wick, I got that wick, got a little bit of that one, I got that wick. I got now exactly that bullish candle close above. Look at the retest of that red line. Okay, so if we break today for a new, let's say a lower low below this purple, maybe we stop right there. And that's where the buyers step in before it gets in this big green zone. But right now we're moving back up. So I can figure out right now we found one bottom at the lowest point of the day on the 5 minutes. This is where I start my green zone. This is the first leg coming back up. So I stretch it into the future and I determine, okay, so it came down, one leg down. We're coming right back up. We're struggling with this neckline. This is where it could get a little choppy, a lot of indecision. Let's say it pushes back down right there. Could be a double bottom. And then the double bottom might have the more powerful leg to break this. and continue to get up to that hourly white line before it gets up to that daily position. However, if it's coming down here and it closes below, green box goes to red, and then we're selling off to the red line. If that red line can't hold, the top of the green zone. If that can't, then right there. You see the big yellow right in the middle? That's where the big buyers are. Why? Because that's a daily yellow line. This just, in fact, represents just a short-term red line, okay? That could be temporary, but this is the bigger one, right? Color-coded system. I put more emphasis on the yellow, the purple, the white line I know is hourly, not just like a 5-minute line, right? So this is what's going on now with Dow. We're kind of struggling right here, 15 minutes going into Wall Street. It's already created one leg up. But if we look overall here, highest point day, since then lower high, since then lower high, since then lower high. So it could continue to push down, right? So just adding the daily bar indicator, our opening price, remember it was just that brief low, right there. When we opened up at 6 p.m., kind of opened up, brief low, and then had that big bullish explosion right up there. There's our highest point of the day, futures market open. And then since then, came all the way down. We found support right here, London, 3 a.m., came back. London's move is a lower high, and then it pushed. Actually, here in New York, broke right here, London's low, came down. That's the lowest point day. Now we're bouncing up a little bit, okay? So we've got a long rejection wick on our daily. This is the only volume that's contained right now in between here. So it's going to be a big fight. Wall Street could be a little volatile when we open up here, okay? Adding EMA's 9, we're right above the 9, and EMA 200 is above us as resistance above here, okay? So right now, you see how it's pushing down. I like to scalp that move down. If I was in this, I would have liked to scalp that, maybe to come back down. But I don't want to take a trade 10, 15 minutes prior to Wall Street because we still got to analyze Nasdaq, okay? So US 30 is right here on the left side. Just looking at gold, okay? So gold, look, physically broke down there, but look, kind of opened, didn't break that low, came right back up positive. So you still see, still hanging around here, building, continuing to building here. It's still trading very choppy. Hasn't really made its move yet, okay? So let's now continue with Nasdaq, okay? So Nasdaq, remember, we went over earnings, has AMD, SMCI, I believe it's tomorrow in the after hours. Those are big tech names, chip names, semis, which are in Nasdaq, okay? So, and Nasdaq is not US 30, okay? A lot of traders think that these are very, very similar indices. They're not even close, right? They're weighted differently. They consist of, Nasdaq is mainly tech. US 30 represents everything in America, all sectors, not just tech, okay? So tech is very strong. It's, like, look at it. Has every pullback is getting bought up. Previous areas of resistance right here are turning into support, okay? So you can continue with your yellow points of interest. Again, right up here, look at your pivots where it came up, it stopped right there. As soon as you see that, it's a clue to just draw a line right there. Stopped, and it came right back down. Right there, I would draw another line. Like if I want to just make this one a little higher right there. Then you kind of see how it came, big bullish candle, came back down, wick, at this yellow line, support, and continuing to come up, higher lows, close above. Then you're just following your individual candlesticks. It closed right near the high. You got your bullish ignited open. There's your firecracker pop and continue. Now we do have an all-time high set so far, but we've had previous all-time highs in Nasdaq, and they've been continuously broken for new all-time highs. 26,285 all-time high. Again, what I'm going to do is same thing what I did with US 30. Mark my all-time high and bring it down to these bodies. Okay. And to show that those 3 days, it traded in there, it came back in there, pushed down. All-time high, pushed, closed below, pushed down. On Friday, transacted again in there, they pushed it back down. Today, it's a different story. We have a different conversation. Look at how today's daily candle has opened. Bullish ignited, just like if this was a 5-minute candle. It opened bullish ignited, and it's coming up bullish, bullish, bullish. It got up to right here where we opened on Friday, point of interest, yellow line. See how the volume on the daily candle is above this? So if it comes back down to this yellow line, that could be daily support at 26,035. That might be a buying opportunity. However, if I wanted to look at 50% cut line is right here at 26,000. So we'll dissect this in a moment. But see how we opened? Very bullish. And look at it, continuing to push up. That is our opening price. It's a yellow point of interest, but it's also the lowest point today. So our opening is a purple line. There's no wick below us. So it's very strong open today. 50% of this big bullish candle is right here. We are still technically above it. There's been a push down right there, but went back up, push down right there. So see how the volume closed? We got this big bullish bar coming right back up. Now we're transacting back in this red zone. We're at our highest point of the day. We already hit it. But if we travel a little higher, we're not too far away from that all-time high. All I do now is from today's high right now, 10 minutes going into Wall Street, from our previous all-time highs, I just chop it in half right there. Okay. Because if we do technically come up one more kind of deviation right in here, that's right there where they might be holding this all-time high down and pushing it back down. If it breaks above here, we're probably got a high probability we're going to tap into that all-time high and go even further. Then you're just using your psychological numbers above you. If we break 285, 300 is on deck. You can even make your red zone up to exactly 300 right there. And then go to 400, right? Depending on if you're a scalper, go 50 points. If you like 25 points, go up 25. There's 400. Keep it with those 100 psychological. The next big one would be 26,500. Okay, that one I would place more emphasis on 500 than I would 400. Okay, so big bullish candle. Can I determine the point of control of our volume right now? I know it's almost 7.5 hours to go into close, but I can still determine bullish ignited open up to right here. I know it's moving, so it's not 100% accurate, but there's the 0.5 of our current day's volume. I can also determine where's the momentary point of control of our volume right now. It's a big bullish engulfing candle. Hasn't closed, so I don't know what will happen the entire rest of the day. But what I can determine is if we do pull back into here, there could be buyers. You know, we could be waiting for a pullback and buy somewhere in here to take it back up. If we lose this, then we got a high probability we're going to revisit the opening balance and see there's no wick. So if they flip the candle, then it can fill Friday's and Thursday's low. So you can mark up one of those lows. You can either do Fridays, you can do Thursdays, you can do right in the middle of both of them. That's your choice, whatever you like to do. I'm just going to keep it with Friday's low because it's fresh in the market. So if we revisit that, that's the first one we're going to revisit. Okay. But today is very bullish. It could definitely trade through here, but we got to acknowledge that we're trading in the all-time high supply zone. And we got to understand that it got rejected there, got rejected there, got rejected there. So it could technically get rejected back down. Okay. But Wall Street volume might have something to say, and we just got to trade accordingly. So very bullish on the daily. If we look at the overall pattern, big bullish rally, pullback, holding. This could be the higher low coming up. Again, double top could be somewhere in here, and then we talk about this later this week. However, it could just continue breaking out and drive. Okay. And there's no stopping Nasdaq. There's no stopping tech right now. A lot of those tech securities are trading at their all-time highs. So, you know, it's got investors continuing to buy. We just got to continue to trade with how the markets are moving. 4 hours. Okay. You can see the big 4-hour push. We had a little bit of a push down last week, but when it came back in, lower high, they pushed it down. They closed it below right there on Friday, but it slowly came up on Friday. Sunday, you can see right there. Here's Europe. Okay, came up, and again, a strong bullish candle coming right back up. So on the 4-hour candles, if you look at the pattern recognition, we drove up. Consider this all one top at the all-time high. Consider all this kind of like the support, the bottom. We're coming back up with this strong leg. So does it have enough juice to continue to move up to this yellow line, to the orange all-time high? Will it break out further for a new all-time high? Or is it going to just come in here? And then see, guys, what I'm looking at is kind of like a pattern to see if it will come back down. I'm going to watch this all week to see, and there would be the break on the 4-hour to continue to maybe come down and Nasdaq to sell off, not crash, but correct itself a little bit. Possibly, maybe after all of the tech earnings are through, there might be then sell off in the markets this week. Could be profit taking, all of those things to consider. But we have a strong 4 hour bullish momentum trading right at the highest point of the day. If we go into the 1 hour, even the 1 hours look strong, starting right here, pushing up, pullback. So right there, that's a white line. It's look, guys, and then you can see there's the big hourly bullish candle. Open the day, 6 p.m. Look at the pullbacks. If you just if you were just trading at 6 p.m. today and you didn't even trade the candle, you just looked at that hourly candle and you just cut it in half and you placed yourself an alert in there, you see the market didn't naturally come back. Look, there's let's all do it the math together. This was 6 p.m. 7 p.m., 8 p.m., 9 p.m., 10, 11, midnight, 1, 2, London. Guys, if you just cut that in half, you placed an alert there and you created it and you waited patiently. Look at the market returned and London came right into 50%. And if you had a buy, you hit your daily goal right now. Okay? You don't even have to be trading Wall Street. Do you guys see how that happens? You just got to recognize the right bar and look at it. And if we say patient and discipline, it took 2, 4, 6, 8 hours before it came back in there. But look at what it did. It came back in there. All of those buyers that wanted to buy the opening day's balance, they didn't want to FOMO buy the highs. They're smart and they wait and look at how it returns right in there. And you could have been buying with this, okay? And since then, it's coming all the way right back up where we just hit the highest point of the day. There's the hourly rejection. You can see we have a lot of hourly wicks right here and bodies. So I know I have a white line. Body, body, wick, wick, wick. That wick right there. So we got to acknowledge that area, okay? So right now it's coming back up. Maybe Wall Street will return this back down or it just blows right through here, okay? So on the 5 minutes now, this is what we've got going on the fives. Strong move coming up from that point right there. Higher low, continuing to make higher highs. We're still holding all of this, like I can see right there on the 5 minutes, there was a resistance right there. Resistance, body closed above, turning into support. Looks like there's a double top already forming going into Wall Street right now, where it came up, back down, coming up, back down. So you can kind of see where the double top is right at these bodies right here. So will it push and break through here? Looks like it. That's what it wants to maybe do. Like here, it came up. There's the neckline, back up, second leg right there. If it pushes with Wall Street, might be an impulse. But if we're watching, maybe we've got to watch a body close, maybe come back up and come back down here and start to break down in here. However, they could just fake us out and want us to assume it's going to sell and then it just continues to go right back up. So that's what we've got going on Nasdaq right now. Daily bar indicator beside us. Very bullish. Okay, you can see from the opening balance was really bullish right there and hasn't looked back. Okay, so maybe they want to cool it off in Wall Street, but come back down. Could be buying opportunities down in here. Okay, could be a quick sell at market open. EMA 9 and 200 added on the charts. Nasdaq right to the right of our charts right here. We've got US 30, which closed above. So I'm just continuing to go through red to green, just catching up. And looking at gold, okay, gold is breaking down. So you see no volume close above, multiple rejections. So it looks like gold wants to continue with this second leg to continue to sell down. We've got sellers. We had volume close below. Looks like gold wants to sell, so gold could continue to sell down. But we're going to watch these two on market open, okay? So what are we? 2.5 minutes away. Again, please, guys, pick which security you're going to trade, whether it's NASDAQ or US 30. If you're trading the futures, you don't have to worry about spreads. But if you're trading Forex, you do have to look at spreads. And I don't know if you guys maybe took a few of our signals. I don't know if you guys took a trade with me. I don't know if you guys are in the doing good today, like you're in the money. Some of you guys maybe are you at your daily goal. Some of you guys might be in drawdown. Okay, everyone has got a different situation, but everyone has to manage your own account, right? And then have rules at market open. I know some of you guys trade right away or might be in a trade right now prior to market open. If you are, that's great. Just use proper risk management. That's it. Some traders wait 5 minutes for the first 5 minutes to close. Some traders wait the full 15-minute candles. They're not even looking at 5-minute candles. They're on the 15-minute bars, and you got to wait 15 minutes. Some traders wait till 10 to start their first trade of the day. They wait for Wall Street to open up. They allow the crazy volume, news, all of these things. Okay. And then I can see US 30 is trading at that hourly position right here. And then there's also a daily position above us too. But right now it's got a nice bullish leg. One more minute to go. So you remember this Nasdaq open bearish ignited, came down right down to the bottom here, got a wick coming back up. So they could flip this and turn it back up bullish right at market open. Okay. And it could continue to fill that wick. That's our daily high. Get up to that hourly, possibly break that. I would be concentrating more on the yellow line with Wall Street because bigger volume has bigger moves. Here we go, 30 seconds to go in. Please manage your own account, okay? Right? That's the problem with trading these days. Like my risk is completely different than yours. Like you got to understand that's just how trading works. If I was trading alongside someone with a bigger account than mine, that person has different risk. I can't mimic my trading with that person because they have probably way more capital than me. So I can't use the same risk that they use. I'll probably blow up my account if I do that. Okay. You got to manage your own account. Okay. So Wall Street tagged that hourly line and they're just dumping it. Okay. That's the first 15 seconds. Amazon reached an all-time high at $255 a share. Amazon had earnings last week. Okay. So you see there's a big wick. It came down, coming right back up. Right back down, continuing push down. Okay, if you're not in a trade, let's watch that opening balance. Will they break that? Will it come down for like that double bottom at the lowest point of the day? Nasdaq is still going up, new high. You can see that these are not correlated. These are completely different securities. Big sell-off right off at the open. Okay, but you see how it tagged the white line. That was similar like our gold trade. We waited for it. Comex came up to the white line, then I took the sell. Very, very similar here. Wall Street built it all the way right up to that hourly resistance, and boom, tag those sellers, and they're dropping it down. So we just now hit the opening balance, the align, and there is some buyers showing they're interested. That's a big candle. Okay, if we measure the entire high to the low so far, that's basically 100 pip candle on US 30. 100. That's a massive candle. 3 more minutes to go into the close. There's gold selling off, guys. So did it close below that green zone? Yes. Go red. So it took a little time to develop, but it eventually pushed down. Okay. So if you're in gold sells, it's coming down, coming down. Okay. It all happened at that hourly white line, guys. That's why it's great to do a top-down analysis and understand where you're trading at. So you're not guessing. Just like right there, too. It came to the opening balance. If you were selling, if you sold this, you got to do something at the opening balance. I know you want more. This candle could possibly break. I know it could. But if you don't respect the opening daily balance of a candle, like that's the highest time frame, even for a scalper. Like you got to understand trading is if you're selling, you want to close your position where you assume the buyers are. Same thing. If I'm buying, I want to close my position where the sellers are. That's how you realize profit. I know you want to continue to hold the trades as long as you want, but sometimes it comes right down there, gets a wick, and all of a sudden it's coming all the way right back up. And then you basically gave away 50, 70, 100 pips back to the market. And someone always says, well, Ron, it could go break down low. I know it could, but if you want to trade with the woulda, shoulda, couldas, try it out, back test it. Tell me over time after 6 months, 1 year, how much money you leave on the table. I added all mine up. It basically kind of, I could have bought a new car. I could have renovated my home. I could have paid off a portion of my mortgage. How much money I left on the table because I was just assuming that it would go more. And then I said, after that, when I calculated all that numbers, I said it makes no financial sense. The point of trading is to make money and pay off your debts and be financially free. It's not about hoping where things can go. Trade from one zone to the next zone. You don't need to close your entire trade. Take profit off the table. You don't need to take 80% out. Take 50, take 25%. Just realize some profit so you can compound your account. Because sometimes the market gives you and it will take it right back within the next candle. Especially if you're intraday trading or scalping. If you're a swing trader, this is not your conversation. You're not if you're in a sell, maybe you're looking at the daily and you're looking for a bigger move. You're not concerned about these individual candles. I'm talking more for scalpers and intraday traders. If you're a swing trader, you're not even looking what's going on the 5 minutes. You're sitting on the 4 hour candles. That's what you should be doing. Okay, so Nasdaq now took out the highest point of the day and they've kind of pinned it down. So here's the close. So I'm going to assume that US 30 is closing below this green zone, so I'm making it red. If it comes back, can I sell that pullback at that daily position? It opened ignited. So now is it going to take out the lowest point of the day right there? Or is it going to hold and come back up and flip back up bullish? Okay, so now we're testing our lowest point of the day and this previous bottom. So they just broke it. Now what we got to do for is look for, are they sweeping the liquidity down here? Okay, if it comes down, catches a wick and goes back up, then I know it's a fake out or sweep of liquidity. However, if this bearish candle does in fact close below here, then I got to go with that zone back to red because it might have further momentum that it wants to continue to push down. Nasdaq looks like it's a good sell setup right here. I'm going to take a Nasdaq sell. Okay. I'm going to place my stop loss above the white line, above the hourly, above the Wall Street pin. And I'm looking to see if it can come down to that red line. Okay. I know it's, and then break maybe to the top of the green zone. So I'm testing out a Nasdaq sell. Okay. I know I went in a little impulsively prior to the candle closing, but I'm looking to see if this thing can penetrate down and then come back down and close with the volume below. Okay. So I'm testing out a sell on Nasdaq. And then measuring to the red line would be about 30 to 35 pips down there. That's when I can start to reduce my stop loss. And then ultimately, if it can get down to the top of the green zone, could be about roughly 60, 70 pips down in there. 80. Okay. Okay, so we broke for a new low. We have to break new lows in order to continue to come down. What I'm looking at is like kind of double top pattern where it came up, back down, kind of that sweep of that liquidity coming down with this bearish candle. So I'm looking for it to come down, maybe close down there, come back up, and then break down further. Okay. Nasdaq, it moves a lot slower than US 30. US 30, you see, they swept the low and coming right back up, very bullish. Okay, so we got to right back at that opening balance price. US 30 is a little bit more volatile than Nasdaq right now. Ephraim, we got 10 a.m. news. Yep, I hear you, brother. I'm hoping to be out of this trade in the next 23 minutes. Okay, so I haven't measured it out for everyone. From here to the red line is 30 pips. That's when you can reduce risk. You don't have to go to all break even. You can go just right above this candle. Okay, and that's reducing risk substantially. Okay, I'm going to do it right now. I'm going to just go above the high of this wick. So you see, I've reduced my risk from where I had it by almost 40 pips. Okay, so If I do get stopped out now, I only have about 25 pips of risk. Okay. So I'm in this, but you see risk management, reducing risk while in profit. Okay. I haven't taken out any profit as of yet. This candle is closing in 90 seconds. Have we tagged this red line? Reason being, this red line was resistance right there, resistance. Maybe it's support coming down right now. Okay. So there's 30 pips. If it comes down there, you can go to a full break even if you like while scaling some out, or we continue to hold this and see can we penetrate through this and get that further pushed down to about 40, 50 pips. Okay. So I'm going to reduce all risk now. I'm at a break even. Okay. Today's been going good. We want to learn all about risk management. So I have no risk. I'm in profit, 30 pips and no risk. Though my worst case scenario is it comes up and it hits me at a break even. No win, no loss. It's all good. Okay, now we got to follow the last 30 seconds. You're welcome to take some out here if you're happy with 30 pips. Nasdaq doesn't move like US 30. A nice sell on US 30 is a 50, 60 pip candle. Got to cut that kind of in half here. They're different sizing contracts, all of that. That's why I prefer scalping US 30, but I like Nasdaq's setup. Okay, and then we got to cut this candle in half. I guarantee you half of it's going to be right here at this structural area. We'll see. Here's the close. Look at we're closing right near the low. If we get an ignited bar, get ready. It could just start dropping. Okay, half of it is right there. We opened, ignited. Okay, so it just created a low. Now it could retest this previous red line. That could be the resistance now. So right down to there's 40 pips. But if it has to come all the way up, 50% is right there. We can find the point of control of that big body candle. Open. Sorry, I need my Fibonacci. Open price, closing price. 50%, I was right on where 50% is just by cutting in half. 618 is the right there and there. Okay. So if it comes all the way back up bullish, yes, it's going to eat away at our profit, but we still have the bearish point of control if we want to hold for a bigger move. So all we got to do is come back down, break our low 40 pips, and then start to come down maybe 50 down into where there's support on these 5-minute candles right in here to that point of control. Yes, and US 30 closed below, so green box goes to red, and you can see it's continuing to push down. Beautiful sell on US 30 if you guys got it. I saw some of you guys were already in sells. We got a beautiful bearish shooting star candle on Nasdaq. Let's see if we can continue to come down. And then if it starts dropping 40, 45, 50 pips, take some money out, guys. That's it. If you need me to do it, I'll do it. I'm taking out 80% right there. Taking out 80%, I got 20% running. So I just took out 80% down there of my trade at 45 pips. I'm happy. That's all I need, right? If it goes down, continues, my runner will go down. But this thing could come all the way right back up to test in here and possibly the break even. So I don't want to kind of just leave 45, 50 pips. Just remember, guys, I added up previously years of leaving money on the table, and I told you guys I could have paid my mortgage a lot earlier. I could have bought a new car. I could have done rent. I could have gone on vacations. I don't. I'm a robotic guy. Some people hate the way how I trade. I don't really care. I know at the end of the day, my finances and all of these taking out money, being not greedy, being disciplined can get you a vacation at the end of the year. Can pay off your credit card. All of those things. And in the runners, if they continue to go, we're running in profit. There's nothing wrong with that. US 30, guys, beautiful. So you see kind of the bias was to sell. Remember when I went to the hourly showing you guys hourly kind of, that's why top-down analysis can give you that bias and really, really put you in the right mindset when you're trading. So look at that. And just follow, guys. If you got to research this or look at Wall Street, came right in, tagged that hourly right at 9:30 and continued to drop down. I watched that tag of that candle where they swept the high on Nasdaq, came, closed. Again, it was coming down. I went in on an impulse, but I like the way how they took out the high. There's always sometimes intuition in trading, okay? But good, guys. We're again 2 for 2. I believe we were 2 for 2 on Friday managing risk. We're 2 for 2 today, managing risk. It's great, guys. That's how we want to trade. And then if this thing comes all the way down to the top of the green box, you really have to respect that because this was the last lowest point right here, right there. So if it breaks that 26,033 and then comes down into that green zone, you're right at that 200 EMA, right above that daily position. I'm sure if it breaks that low, they'll sweep the liquidity and turn it right back up. So if you're still selling in there, you need to continue to realize some profit down in there. If you don't respect buyers down here, then you could be giving a lot of your profit away. And that would be close to an 80 pip move on Nasdaq. Gold. Yeah, look at what gold did. Came all the way down, broke again, supporting level, and look at where it kind of daily 4,000, the opening balance. And look at those opening balance buyers came right back in and pushing it right back up. So as easy as it comes down, you got to know where to close your selling positions, guys. It's a game of no trading is more about knowing when you buy, where to close your position. When you sell, you got to know where your buyers are. That's the name of the game, basically trading from one daily area to the next kind of. And if you don't do anything, I know it's sad. You just pissed away a shit ton of money on that sell, and it's coming right back. Am I surprised that it took out the daily opening balance and new buyers came in? I'm not surprised. But if you are, you gotta continue to review this. Okay, so if you're looking to sell US 30, you see we haven't came back in this zone. We haven't even came back into here. So it's still pushing down. Ignited bar, continue to push down. If you're waiting to sell, it's not advised that you sell the lowest point right now. That's FOMO, right? You want to wait for a proper put, come back up to here to maybe sell that. Maybe you want to wait for, maybe it will come a little higher into there. You want to sell that point, right? You just got to wait patient for it to come to you. If you get in the habit of just buying the highs, look at if you bought Wall Street's high today where they tricked you, you're severe at a loss or you over leveraged and you did damage to your account. Same here with Nasdaq. If you bought the high, you got excited, you FOMO traded, they brought it down on you. Same with if you're again with gold here too. If you kind of sold the lowest point, you're in drawdown. This is where you want to sell the high, sell at premium areas and you buy discount areas, right? And look at it now. It's coming right back into this zone again. Okay. So I don't know. I'm a scalper and I trade zone to zone. Yeah. Yeah, Ephraim, watch the zone to zone webinar, guys. I'll show you where it is at the end of this call. But here, guys, exactly. If you're trading US 30 and you're in a sell, this is an opportunity. You could be doing a trailing stop loss. You could bring, if you sold at market open, you could have a trailing stop loss right here. This is all profit. Right there, when that candle opened and pushed down, you could have your stop loss below this high. All of this is profit. As this candle closed below, you could have your stop loss at 50%. This candle continue push down. You could have your trailing stop loss just above this bearish fair value gap right there. All of this is in your pocket. If this thing continues to go down, you just continue to move your trailing stop loss down. Eventually, it will come up and tag you out, but you don't want that big bullish candle to come all the way back up. So that's when the market is moving in your direction and you are trading with a trailing stop loss, you can trail your profits behind and just count the money in your bank. Okay. And just look at the positives. Eventually it will turn back up, but if it turns back up right now, you get stopped out. All of that is in your pocket. You don't want a big bullish candle come up like this and you haven't done anything because it's demoralizing. That trade will affect you the way how you take your next trade and how you trade tomorrow and how you trade this week. Like if you're in a sell and you sold that and you're not really realizing any profit and it comes all the way back up to where you entered, you might be at a break even. Some traders, believe it or not, don't even use break evens, and then it goes and tags their stop loss. And then they're blaming the markets. Oh, the market did this, the market is corrupt. No, it's not. You are greedy. You're greedy. You're just, I'm sorry to say this, but I gotta say it. I wish someone was telling me the same shit when I was this person as well. Um, because you're just greedy. Learn responsibility. Yeah, look at gold. Gold is the same shit. If you were selling down there and that was a beautiful sell, like came down 150 points, that could be your daily goal. You don't do anything because I know you want 200 pips, 500 pips. Look at what it does. I'm not surprised about that. I'm not. Okay. I'm It came right back to the opening balance. Those big buyers who opened the day, they waited patiently to buy it right back. And look at what they're doing to the sellers. They're squeezing them now. And unfortunately, those sellers, if they didn't do anything down there, there's your lesson. There's your lesson learned. Okay. I'm still in 20% with Nasdaq. I'm still running this thing, but I see we're kind of still struggling down in here. So one more push down. I might close out this trade right here. I'm going to close it out. The remaining 20%, I'm out. Okay. And that's it. Realize even those profit as well. So I closed out the remaining balance of my trade right there. And I'm happy. I've hit my daily goal. Okay. It's not a lot of traders can say they've hit their daily goal prior to 10 a.m. Efren reminded me that there is high impact news. I don't even want to, Efren, I don't even want to be trading this high impact news. I've hit my daily goal. I'll watch it and see what happens, but I don't want to go in. When you've hit your daily goal, just be done for the day. It's 10 a.m. Eastern over here where I live. I go for my daily walk. It's beautiful outside, nice sunny day, November. It's beautiful outside. Go for a coffee. Um, and enjoy the day, guys. Okay. So even US 30, it's coming down to now the top of the green box and it could hit this daily yellow line. So please, guys, I don't know where you entered. I'm just measuring this move. That's basically 190, 200 pip drop. Okay. You could even lock up 100 pips and leave the rest running, but just don't, because this could do exactly what gold just did. And I don't want to see that anybody to happen on this call. Okay. Please, guys, get in the habit of learning. Who cares about what could have happened, should have happened? Yes, if you're in the trade, this could technically go down 300, 500 pips. But what happens if it just does what gold just did and it comes right up to there? Then what conversation are we going to have? There's nothing. Just either have a trailing stop loss, start taking out some money, because this could be a bullish point of control. We're big buyers, not just Mickey Mouse 5 minute, 1 minute buyers. Could be big daily buyers right in here. See how the sellers are selling into them? Okay. Um, and the market is still pushing down. So, guys, Nasdaq. Wow. Okay. So Nasdaq market sell off today. Okay. So far. I'm out of Nasdaq, but if I was still in, I would really be watching this area right now. I'd probably be out myself when it broke that low right there. Okay. So if you're looking now to buy, notice if you bought any one of these candles, you are in drawdown, right? So maybe it's better to locate a buy at this yellow line. Same with Nasdaq. Okay, that's now basically a 90 pip move to the 200 EMA. I don't normally use a 200 EMA in my trading, but some of you guys do. You got to respect that 200 EMA. It's like a support line in itself. You see how it's coming back up with a wick. And long on the gold, okay, from the previous move, it came up, guys. Hopefully you locked some profit on that previous long on gold. And then all of these zones, okay, is that red to, did that body close above? Yes. So if you're still trading gold, it's back above there. This consolidated zone, we're no longer in that. I would get rid of this red zone. Cut lines, tidy up the chart if you're going to continue trade. I would cut that big bullish candle in half. There it is at the bodies, cut in half. So there was that leg down. I had that arrow coming down where to the opening balance. You don't do anything, review this, and there's your lesson for the day. If you're in US 30, my goodness, right in there, I would definitely be doing something right in there. Holy shit, that's a massive sell. Good job, Efren. Yeah, right there. That, guys, that's like it doesn't get any better than that. Okay. That's a bingo, bango, bongo. That's a bada boom, bada bing right there. Okay. If you're selling, don't feel bad closing that position because you just met your daily goal. That's what trading is. Then get off these charts and stop getting a headache staring at these charts. Wow, Sherry, you took that Dow sell. Congratulations. Okay. And if you want to leave a little runner to continue to go down, perfect. But don't leave the bulk of your trade, guys. That's a daily goal. That's why we trade. We started this call at 7 a.m. We've been here for 3 hours. Time is money too, guys. You got to understand that. We hit daily goals, get out of these markets. Trade very disciplined. Trade like a banker. Don't trade like a gambler. Okay. Same with that Nasdaq. You see how it came down in the green zone right at 200 EMA? That was a 90 pip drop. If you don't do anything, this candle could flip back up bullish and start a next bullish leg coming up. And you just basically gave the market a majority of your profit back. Like that candle alone was almost 35, 40 pips. Okay. This is unbelievable how the market is continuing to push down. Now, if this closes below, okay, it might have further room to drop down because then this yellow line could turn into resistance. It's unbelievable how it's dropping. Sorry, where was that webinar? I'll find it for you, Kara. It's I believe it's in the I'll find it. Let's see if I can find it for you. Um, Zone to zone. I believe it's in over here. Zone to zone, zone to zone. It's a really good one. I believe it was like a 3.5, 4 hour webinar right here. No, that's the zoom out strategy. That's not the one. Um, Number 50, boom. There it is. No, thanks, Boom. I appreciate you. Number 50, zone to zone trading. If you guys want to go over that, that's basically how I trade. That's exactly how I trade. I think this was a webinar we did. It was, let's see, right here, 50. Oh no, this was a 2 hour one. So it wasn't the one that I did with the blocks, but this is a good one. Zone to zone trading is a strategy where traders identify key support and resistance zones on a price chart and make trades as the price moves between these zones. The goal is to capitalize on the predictable price movements and reversals that often occur at these key levels by entering, exiting trades at these strategic points. It's a good one, guys. A lot of these webinars are all good ones, but that one is honestly a really, really good one to help you understand. You trade from one zone, or you can utilize the word zone. You can replace it with a point of interest to the next like point of interest. So see this yellow line? It went to the next yellow line. If you were in a buy, that's it. You kind of bought the yellow daily opening balance, and now you came right back to the next daily point of interest. That could be in and out of your trade. Daily goal done from yellow tape to yellow tape. Okay. Or from like one green zone to the red zone, however you look at it, from one point of control to the next point of control, all of those things. Okay. But guys, we're going to have high impact news right now in the next 4 or 5 minutes. ISM manufacturing will stick around. Let's see what happens in 3.5 minutes. So look at the forecast. Okay. So remember, anything above 50 kind of shows us an expanding market. This thing is below 50, could show contraction. That's not good for the US dollar. So if that's the case, maybe gold might continue to move up. Maybe markets might continue to sell. If you want to read a little bit about it, what this thing is, it's a level diffusion index based on surveyed purchasing managers in the manufacturing industry. So it's purchases in the manufacturing industry. If we see that the purchasing is below 50, it's showing that they're not purchasing a lot, and it's showing the manufacturing industry in the United States month over month is contracting. Then how will that be at the retail level? How will that be at the next level? Everything is a trickle down effect. Okay. If the purchasing in the manufacturing increases above 50, it shows that the purchasing power in manufacturing is increasing. So that should tell me that the manufacturing industry is growing. And when manufacturing is growing, more job growth, more people working, everything is tied together, right? You pull one string, should affect the other side of the string. So we don't want, technically, we don't want to see this below 50 because then America is contracting in the manufacturing. Probably that's what's going to happen due to tariffs. Tariffs are not good for economies. Whatever Trump is saying, that he's full of shit. Okay. Ronald Reagan even said that's why he's pissed at the Ontario Premier Doug Ford for playing that exactly Ronald Reagan, what he was saying about tariffs. And Trump doesn't like that. Reason being is because the tariffs bring in money from the consumer and goes to the billionaires' pockets. The poor and the blue collar is not poor, it's middle class. I'm blue collar. My family's blue collar. I've been blue collar all of my life. um, you know how they say white collar is kind of, you work in an office, you wear a suit and tie, that's white collar. Blue collar is you're working like a factory worker, you're just working in trades, that's blue collar. Maybe what is it when you don't even have a collar? What is it? What is no collar? Okay, there's white collar, blue collar. What is it if you don't even have a collar on your shirt? What the, no collar. I'm a no collar worker. But there's gonna be a lot of news coming out, guys, in the next 60 seconds. And look, just look at, if you're not in a trade, just observe. The market sold off right now, right to the lowest point of this big demand area. And now we have high impact US news coming out. So this could be where it bounces back up, right? Just watch and see how they manufacture moves. Just like how we watch the manufacturing industry, watch how market makers manufacture moves in the markets, right? How they engineer moves, okay? Market makers are engineers. They're financial engineers. They engineer the move from up here all the way down here, and we have news coming out at the same time when it's down here. So without even just looking at the news, maybe it's just going to bounce right back up. Watch, okay? I'm not even looking at the news. I'm just looking at the technicals, okay? Let's see in the next 9 seconds. I might be completely wrong, but let's just see what happens, right? This is how I used to study the markets. I used to see correlations. Why are they bringing it all the way down here when there's high impact news and then the market opens up in a demand zone after it just dropped? Again, I'm not looking at the numbers of the news, right? I'm just looking at price action here. So it opened ignited, came up, they've rejected it. So it's still holding its ignited open. Will it continue to come up? And if it does, trading into 50% of that bearish candle. Okay, so it came up, they rejected it back down. Will it continue to refuel itself? Now we can maybe take a look at the numbers. Did they release them? ISM manufacturing, holy shit, 48.7. That's not good. Okay. So that's really showing a contracting manufacturing industry. Okay. So how will that affect the dollar? The dollar is dumping right now. Gold is probably pushing up right now. Market is now selling off. So they're continuing maybe to push this thing down now, according to the news. So maybe it has to take out this block, right? And look at those two wicks right there that saved the market right over there. When was it? It was Friday at 1:30 p.m. Eastern. So we're trading right back down there. Will it come right back up or is it continuing to push down? Anyone still have a runner on Nasdaq? Unfortunately, I'm not in it anymore, but if it tags that yellow line, that's about 115 pips down there. Wow, Refren, good job. You got it. Good job, man. And that's it, Efren. In and out, bro. Get your daily goal and go on with go see how your kids are doing, go see how your wife is doing, go for a coffee. If you have business on the side, take some profit from the stock markets, open up a business, get some rental properties when the right now when the housing market starts to crash, you can start to move your money strategically into long-term assets, pay you income, passive income over time. That's the way how to do it, guys. I know everyone wants a Lamborghini and the next newest car. Who gives a shit about those? Nobody cares about those. I've had fancy cars in my lifetime. You have it, you drive by, people look at it, no one cares. At the end of the day, I like passive money coming in as I get older, and not just for myself, but for my kids and generational wealth, guys. That's how we got to do it. Okay. And you can see we're trading in that green zone. So they just broke it, but look at that red line. I didn't just pick that red line out of my ass. Look at where I came to. I just looked right there. Equal bottom lows, right when it broke that green block, double bottom when Friday at 120 and 135. So you can see that's where the market rotated back up. They manufactured it all the way back down to that exact location. That's where you could have like a pending buy in the market and you're in profit with basically zero drawdown, scalping this candle back up for 60 pips. Like, and that's where you got to understand to sell your position where those buyers are. Okay. And that's what I mean. Like it manufactured right with the news, and now the market could rotate back up. It could continue to push down lower today. It absolutely can. But maybe it wants to test some blocks. You could be now have the bias to sell the market. Yes, you could. If you're buying, there are counter buys, unless there's kind of double bottom building. This is just a single bottom. But you could continue to sell today. Maybe place one alert right here at the L line. We have not came in here. That was the first 5 minute candle of Wall Street. Place an alert. Maybe today, this afternoon, it might come back in there. We might be able to sell again. This look at the number. You'll remember this. 47,618. 618. 618 is that golden number from the Fibonacci. So I remember 618 right now. So I know if US 30 comes back up to 618, 618, I might blindly just sell it. No, I won't do that, but probably. And then locate right there, 50% of this block. We haven't transacted in there. If you need to place kind of like just an alert, it's not saying just buy or sell, just place an alert there. If it comes in there, you might get to sell again at a premium and continue to move with the market. With the big sellers, right? We haven't even transacted into 50% of this big bearish candle. Okay, so guys, that's trading in a nutshell. Mondays are kind of tough to start in the markets. There are kind of those days where a lot of traders don't even trade Mondays. They observe, they watch, they trade Tuesday, Wednesday, Thursday. But guys, I got to wrap up the session. Good session. Tomorrow we'll have our session again post New York. Dave will do New York, I think 8 a.m. I'll come in around 11 a.m. We'll go till about 2 p.m. We'll have YouTube. Remember, YouTube this week is just Tuesday, Thursday. Every other day is just you and I in here. I enjoy these sessions a lot, but we still want to continue to grow YouTube. But I appreciate these sessions with you guys. Don't forget, guys, if you want to join up in that risk management over the weekend, that boot camp, you guys are welcome. If you guys are in the lifetime membership, you guys get it. I'll provide the Zoom link in the Discord for you guys. But again, guys, if you did well today, that's it. Just now, maybe spend 30 minutes of review, go over a couple of your trades you took. And just please, guys, if you guys can go over this blog, I'll go over it tomorrow with everybody. But you guys especially, can you guys go over this? Losses in trading offer valuable lessons. Okay. This quote down at the bottom. Where is it? If you focus on your loss, okay, in anything, even in life, I lost a family member, if I just focus on that loss, I will continue to suffer. If you focus on the lesson, you will continue to grow. This is not just for trading. This is just every day in life. Okay. We all go through losses in life. We all go through losses in trading. But if we just continue to dwell on the losses, we're going to continue to make ourselves suffer. So again, losses are lessons. If you lose, it's a paid lesson. If I took a loss today and I lost $100 to the market, it's $100 lesson. I got to go back and learn from that. It's like paying for a mentorship. I paid. That was a lesson. $100 cost me out of my pocket. If I don't go back and learn from that, I might lose another $100 on my next trade, or another $100 the next day, or continue to lose money. But if I go back and be mature about this and go back and learn, I learn a lesson. And with a lesson, you will continue to grow as a trader and as an individual. So it's very important, guys. Go over this blog if you guys can at some point today. Maybe take you 5 minutes to read it. But losses in trading offer valuable lessons. It took me a long time to understand this. But when I started to understand that every time I lose in the market, there's got to be a lesson learned, whatever it is. Okay. If you bought today's market open and you lost, you got stopped out, there's a lesson right there. You got to learn, right? There has to be anything always offers lessons, but it's to those who go in and learn about it or really research it. Okay, guys. I had a good session. Have a good day, everyone. I hope everyone had a good, relaxing weekend and ready to hit these markets. And remember, have your November goals. Have your yearly goals. Remember, a lot of you guys said 2025, this is going to be my year. Some of you guys have knocked it out of the ballpark. Sorry for the baseball pun, but some of you guys have really done really, really well this year, and you're continuing with your growth going into next year. Some of you guys still have a lot of work to do. I'm going to be honest. Some of you guys are still over leveraging. Some of you guys are still trading reckless. You got to learn somehow to fix this. At some point, we were all there. I was there. Everyone on this call traded crazy at some point. But at some point, you got to learn that this is a business. This is not a casino. Okay. I was reading up on Las Vegas. It is ghost town in Vegas. They are suffering. I think they're losing $10 billion a month down there. So maybe we should start shorting the casinos. MGM Grand, Wynn Casino, they're publicly traded companies. You can start shorting those things. Start looking at the put chain. Um, if you live in Las Vegas, you're an insider. You can tell us a little bit about what's going on in there. But guys, I'm done. Have a good day today. Enjoy the rest of your day. Um, we'll see if we get any more signals coming out today. But again, if you've hit your daily goal, walk away from these markets. Okay. Have a good day, guys. We'll see you guys tomorrow. Again, enjoy the session with Dave tomorrow morning, and I'll come in right after. Okay. Have a good day, guys. Enjoy your day. Thanks, guys. Have a great day. CB, Sang, have a great day. Eddie, thank you for joining, Eddie. I hope you're doing well, buddy. Maybe we can meet up again, Eddie, Christmas time. Brunch is on me if you come to Toronto. Sean, hope you're doing well, brother. Nigel, thank you. I hope you're doing well too. Captain Boom, thank you, guys. Efren, amazing. Good job, guys. Have a good day, guys. We'll see you. I'm gonna go cry now due to the Blue Jays losing. So I gotta go cry now by myself. I will see you guys. I gotta go cry with my Blue Jays losing. See you guys. Have a good day, everyone. Bye, Sherry. Bye, Dale. Have a great day.